Hello all, good evening. Sir, let me give you a brief about the paper pattern, and then I'll tell what we gonna cover also. It's okay. See, so question number 2A, sir. If you look at the trend, they're asking either from the topic supply. If not supply, then they are asking from e-invoice concept. So there are hardly 2 questions regarding e-invoice from that, or from e-waybill, So okay, so these topics, and then 2B they're asking from returns chapter. This 2B is like always standard only, sir. There is no change. Always they are asking from returns chapter. And one more thing to be noted is like this question is going to be a straight theory. It is like a straight theory question. So straight theory question, instead of asking like a case study and all, they're asking like write about GSTR 1, or like what are the contents of GSTR 3B, like what are the transactions which are treated as supplies even though there is no consideration, write about composite supply, mixed supply, like that straight questions they are asking, question number 2A and 2B. Okay, so now, so let me make sure your mindset also be prepared for here. Sir, answering a straight question is much tougher than writing a case study based question. So what, because in straight theory questions what happens means, let's say a question might have some 8 to 10 points, but we'll remember the concept, but we cannot remember the exact 8 points. We may remember 4 points, 5 points. It's like that only. The other 1 or 2 points you're gonna write it like general way only. So these questions like 2A and 2B, like 14 marks also. Here you getting 10 marks is good. It's okay for this question. So we cannot get like 14 out of, like for 14 out of 14 we cannot get, or else like 12 also a little tough only here, because these are like straight theory questions. Nobody can recall unless you revise like multiple number of times, like 7 times, 8 times, that many times revision happens, then only you can remember each and every point. Okay, otherwise 4 or 5 points only you're gonna remember, the other 1 or 2 points you're gonna write generally also, it's fine. Okay, 2A, 2B. Then question number 3A, sir, they're asking from exemptions. But in one model question paper, sir, they even included composition levy. But I think the chances of asking composition levy is like very less. Okay, in this series, sir, I mean tomorrow we're going to discuss question number 3 related. That time composition levy, like quickly, it's okay, we may not discuss problems, but some 20-30 minutes overview I'm going to give that. And then 3B is about ITC, exemptions, composition levy, and then ITC. So here, sir, mostly it is going to be like a numerical question only, like a problem kind of. So okay, when they are like problems, our chances of getting more marks will be high, because you can solve the problem, and if you write the explanation points, you will get 7 out of 7 also. So 3. Then question number 4. 4A, 4B. Sir, 4A is about TDS, TCS, or if not, sometimes it could be even annual return also. It could be even annual return concepts also. Then 4B, sir, there is no standardly this question is being asked, like, but most probably it could be time of supplies, time of supply. If not time of supply also, like mostly from the chapters we gonna cover only, it's going to come. Okay, this also, sir, this is like one part it's going to be theory, and one question it's going to be like problem. It's going to be like a mix of both theory and problem. Then question number 5A, sir, it could be again time of supply or place of supply. Time of supply or place of supply. And 5b is always from value of supply. And it's a numerical. Completely it's a numerical base, like a problem kind of only. So you know, time of supply, place of supply, the questions are like, even though they are like problematic questions, but more it's like a little bit linked to the provision kind of, like case study based kind of, it will be there. Time of supply, place of supply. Okay, 5a, 5b. Then 6a and 6b, both they are asking from what? FTP, foreign trade policy. Again sir, it is like what? Straight theory only. Completely theory only. This is like completely theory. Then we have another thing, 7a and 7b. 7a and 7b. Sir, customs valuation, baggage, and then here duty drawback. Okay, here again there could be one theory question and one numerical problem based question. Okay, then question number 8 sir, 8a is going to be appeals. 8b we cannot decide sir which chapter. It could be from any chapter they gonna ask. 8a is from appeals. So okay, so now the first and foremost question you will have is like, sir, will it happen as it is? Will there won't be any paper changes and all? Sir, here if you see what I am saying, like I'm almost like, sir, we have like total 7 questions. Out of them 5 questions we have to write. 7 into 2 7 marks questions. So total we have 14 questions. Okay, out of 14 I am talking about what? 13 questions. Okay, now out of this 13 questions, 13 may not happen as I said, but at least 11 questions will happen in our way. Okay, I mean, so at sir 2 I said, 3 4 5 6 okay, leave 8 also, 2 3 4 5 6 7. It's okay, here till now how many? 6 questions related. 6 into 2, 12 questions I have said. Out of this 12, my minimum expectation is like 10 7 marks question will come like as we planned. Okay, sir, but out of 6 we cannot pick any 10 7 marks questions, right? Sir, maybe sometimes like 2a 2b will work as we expected, but 3a also might be as we expected, but 3b might get changed. Or else like 5a 5b might, like we expected, 6a also we expected, but 6b gets changed. So that chance of like some 5 to 6-7% of variability is always possible, sir. So at least 4.5 questions if you could attempt as we planned, that's still good marks only, sir. You're gonna get easily 60s in IDT. Okay, so we're gonna continue this series for 6 days, sir. So my target is simple. So today my target is to complete this question number 2 related. Okay, by watching today's sessions you could write question number, you could attempt question number 2. Then tomorrow 3. Okay, day after tomorrow like 4th, then 5th, then 6th, until 7th question related till we gonna discuss. Then afterwards, sir, I'm gonna release a separate MCQ session also. Okay. So in this, sir, I'm not going to discuss from the basic and all. Okay, if at all anything is needed there, that part only I'm gonna discuss. Okay. So we are starting with the topic supply. It's okay. So why? Because the first question itself would be from supply. So in supply, sir, the definition is from first good and service definition we'll discuss, and then we'll go into that, sir. Good means every kind of mobile property. So only if it is mobile we can call it as goods. Goods excludes money and securities. Goods means every kind of mobile properties. It excludes money and securities. Money means what? Money means not just the legal currency we see, cash, and even includes cash equivalents also, like checks, demand drafts, promissory notes, and even bills of exchange. Then securities. Securities means what? Shares, bonds, debts, derivatives. So all these are what? Not goods. And goods includes actionable claims. So look at here. Actionable claim means what? It is a claim to any debt which is unsecured. So, okay, claim to any debt. Sir, understand, actionable claim means you have a paper or an instrument, a piece of paper with you. With that, you can demand someone to pay you 5 lakhs or 10 lakhs, some amount you can ask him to pay. That right is given by this instrument. Then that is called as what? Actionable claim. Sir, if you have a check, when you present the check, the other party has the obligation to pay you that money. Same way, demand draft, bills of exchange, even lottery ticket when you won a lottery. Okay, but if you look at here, sir, checks even covered as money and even covered as actionable claims. Okay, demand drafts, bills of exchange. Here they are covered in the exclusion part. Here they are covered in the inclusion part. So now ultimately whether they are included or excluded, sir, you can take any way. There won't be any problem. Why? Because, sir, mostly we'll think them as like what? Money only. So they are not goods. If at all you link this actionable claim definition and if you call them as goods also, latter part of this chapter will go to Schedule 3. So Schedule 3 is called negative list. Transactions which are treated as neither supply of goods nor supply of services. Their actionable claims is included. That means what? Ultimately, even though you consider it as good, it is not a supply. If it is not a supply, GST is not leviable. That's right. Understanding, sir? So goods means every kind of mobile property. It excludes money and securities, includes actionable claims, growing crops, grass and things attached to the land. Even though they are attached to the land, they are called as goods. But what? They are agreed to be separated before making supply. By the time the supply happens, they has to be separated from the land. Sir, why? Because we said like movable. Sir, let's say you purchased a tree. Okay, for timber purpose and all, you purchase trees. Now trees are what? Usually immobile. So, okay, trees cannot walk. If they walk now, will die immediately. Okay, so it's okay. So trees are what? Immobile only. But what happens once you want to separate the timber, that will be separated from the land and it becomes mobile. So that's why they are called as what? Goods. Okay, and here, sir, what these two examples is like, in every transaction we see. So usually, okay, you paid coaching fees or you purchase some goods and all. What is happening? One side, the shopkeeper is giving you goods. You are paying money. So money is not taxable. But what is taxable? That good value is taxable. But think of barter transaction. You have you given some rice. Okay, the other guy given you wheat. So for rice, wheat got exchanged and what? Both sides there are goods involved. Then on both values it is taxable. Understand, sir? See, here laptop purchased. What happened? Recipient paid money. So only on laptop value GST is leviable. Whereas this side what happens, sir? Laptop supplied, but the recipient didn't given money. He given 3 mobile phones. This is what? Barter transaction. On laptop value also GST leviable. On mobile value also GST leviable. Why? Because both are goods. Here only one side good, other side money, which is not a good. Then service. What is called service? Service means anything other than goods. Anything other than goods is called as what? Anything other than goods, money and securities, then it is called as what? Service. What is called service, sir? Service means anything. There is no clear-cut definition or boundary also. Anything can be called as service. If it is not good, if it is not money, if it is not security. One important thing to be remembered is like, let's say a building is sold or a land is sold. Sir, usually land. Think, land mobile property or immobile property? Immobile property. So is it a good or not a good? Land, is it a good? Why? Because good means what? Only mobile property. So land is a immobile, so not a good. Is it money? No. Is it security? No. So whether you convince or not, land is service. Okay, if you sell a land, it comes under the definition of service. Why? Because service means anything other than good, money and security. Understand, sir? If any building is sold, that also comes under the definition of service. So it's like no proper boundary also, sir. Everything can be included in the definition of service if it is not good, not money, not security. Okay, service even includes use of money or conversion of money from one form to another, one currency to another, one denomination to another. Sir, what happening here? You are having dollars you are converting into rupees. Okay, both money only. That is not supply. So, I mean, you give $1 lakh worth dollar, and then the other person gave you rupees. That is not a supply. But for that conversion, sir, that conversion will not happen usually freely. If you go to a bank, what bank will do? Bank will take some amount of commission. To that commission extent, it is called what? Service. Okay. Same way, one form to another. Like let's say you have cash, you want to convert into DD. Bank will take what again? Commission. Or one denomination to another. You have a bigger denomination like 500 rupee notes are there. You want it in lower currency like 10 rupee notes and all. Then for that also what? Bank will take certain commission. So there both sides it is money only. But money converting in one form to another, one currency to another, one denomination to another. But for such conversion, the separate consideration is involved. To the extent of such separate consideration, it is called as service. One more thing I'll say. Okay, bank given a loan, or else like you given a loan to someone. Loan means what you'll give? Money only you'll give. When he is repaying also, what you'll do? Money only. So both sides what involved? Money only. But let's say you given 10 lakhs loan, sir. He's paying after 3 years. Same 10 lakhs if he repays, will you accept? What extra you'll ask? Interest. So money, use of money. Here not conversion of money. There is a use of money being happened. For that use of money, a separate consideration is involved. What is that separate consideration? Interest. So to the extent of interest, we can call it as what? Service. Okay. Then for which a separate consideration is involved, then to the extent of such separate consideration, it is called what? Service. Okay. Then service includes even facilitating or arranging a transaction in securities. Okay. What is this, sir? Securities are not goods, not services, but we cannot buy and sell securities directly. The listed shares and all. How do we transact them, sir? Through a demat account, a stockbroker is involved. So through him only we can buy or sell shares, options, futures, everything. For that, why stockbroker will do freely? He'll take a part of commission. Then the commission taken by that stockbrokers is called as what? Service. Okay. See. Sir, interest, what I said previously, interest is also a service. But interest related, there is an exemption there, sir. That itself I am saying here. Interest and discount. Interest on loans and advances is what? Exempted. Interest is a service, but it is what? Exempted. Sir, understand, only when it is a good or service, we have to discuss about exemption. So interest is what? Service, and it is what? Exempted. And even discount on bills discounted. If any bill got discounted, sir, 1 lakh worth bill, okay, which is payable after 3 months, but you want immediately money, what you will do? You will go on discount with the bank. Bank may give you some 95,000 and bank will wait till 3 months and encash it for 1 lakh. So that 5,000 rupees is called what? Discount, which is nothing but the nature of interest only. So that is also what? Exempted. For delayed payment in interest or delayed payment of credit cards and all, any penal interest, late payment charges are there. That also exempted because that is also nature of interest. Then processing fee, documentation charges, all these are what? Taxable. Okay. Then come to the related person definition. Related person definition. So related person. Who are called related persons? Are related person. They are members of same family. They are members of same family. So family means what? Micro family means spouse, children. Okay. So spouse, children, whether they are dependent or independent, always part of family. Then the extended family is like what? Parents, brothers and sisters, and then grandparents. These are part of family only when they are wholly or mainly dependent. Spouse, children, dependent or independent, part of family. Parents, brothers and sisters, grandparents, part of family only when they are wholly or mainly dependent. Such persons are officers or directors of one another's business. Okay. So in A private limited, B is a director. In B private limited, A is a director. So what is happening? In both their companies, each other is acting as like officers or directors of one another's business. Then the whole group is what? Related persons. Such persons are legally recognized partners. I mean, there is a partnership firm there. In that partnership firm, all these partners are what? Legally recognized. I mean, they have a deed also executed. Then they are what? Related persons. Then such persons are employer and employee. If they are employer and employee, then also they are what? Related persons. If any person controls, owns, holds directly or indirectly more than or equal to 25% of voting power. Understand, sir? In a company, or any entity, if a person is having more than or equal to 25% of voting power, then they are called as related persons. Sir, in Customs Act also the same definition, sir. But there the difference is like here instead of 25%, there will be only 5%. Okay, rest all the Customs Act related person definition also same. The only difference is like here a person should have, any person should control, own or holds minimum how much, sir? I mean more than or equal to 25%. But in Customs Act, even it is 5% also, they will become related persons. Then even though there is no 25% voting power, but a person directly or indirectly controls the other, then also they are called as related persons. Okay. Which book to follow na? So this is like handwritten notes of me. If you have that, fine. So okay, mostly I'll discuss this revision series with my handwritten notes only. It's okay. Sir, understand, sir? Sir, usually we'll think like to exercise control, there should be 51% voting power. But that's not required. It's okay. Without 51% voting power also, an entity can be controlled by 1 or 2 persons. These modern day startups and all the modern day businesses and all which we seen will not, the promoters will not have 51% of voting power, but still they can control the enterprise because it's their idea. They are the one who has started that particular organization, but in the process of growing, expansion, they'll take share, they'll take investments from so many outsiders and all. So in every round of investment, their percentage will come down. So their percentage may be within 10%, but all the investors came depending or looking at their name only. Okay, if suddenly these key people leave the organization, then everything will get collapsed. So that's why, sir, even though they have less share capital also, still they can control. Okay, so only voting power alone cannot control. With 3%, 4%, 5% stake also, they can control the organization. If they are key persons, if they are like founding group, okay, they are like one of the brand, I mean, they are the one who created the brand and all, that time they can exercise such control and all. So a person directly or indirectly controls the other. A third person directly or indirectly controls both of them. So like what? A Limited has shareholding in both B and C. So A controls B and even controls C. Then both B and C are also what? Related persons. Such person together controls a third person. A and B together controls C. I mean joint ventures. Then also they are called as what? Related persons. When they are acting as a sole agent or distributor of the other. So once again, sir, I am repeating the related person definition. What are those? First one. They are members of the same family. Such persons are officers or directors of one another's business. They are legally recognized partners. Employer, employee holds more than or equal to 25% voting power. Directly or indirectly controls the other. Okay. A third person controls both of them. Then both these people are also related. Together these two people control a third person like joint ventures. Then also related persons. Next one. When a person is acting as a sole agent or distributor of the other. So whatever I produce, there is only one dealer who will sell all my goods. Then suddenly if he says like I will not sell, then I cannot, I mean I don't know what to do because I have only one agent or distributor who will market all my products. But suddenly if he says no, my business gets affected. That's why he can influence me, control me. That's why they are also called as what? Related persons. Then distinct persons. Distinct persons. Who are called distinct persons, sir? Understand? Sir, in income tax and all, one registration is enough. For every person there will be only one PAN card. One registration will be there. But in GST, it's not like that, sir. You can have multiple GST registrations. It's not centralized registration. Let's say a person is operating in multiple states. Okay, multiple states. Like he has a place of business in Andhra Pradesh, Karnataka, Maharashtra, Telangana. Then what? In all the 4 states, he has to register separately. Okay, he'll have only one PAN number. But with this PAN number, there are 4 GST registrations linked with it. Okay, the same way, sir, a person is having branches in the same state. Let's say in Maharashtra only, he has branches in Mumbai and he has branches in Pune. He has branches in Mumbai and he has branch in Pune. Now both are in the same state only. But still, if you want, he can go for separate registrations for Mumbai branch and Pune branch. So two options. One is mandatory, sir. When you are operating in two different states, then mandatorily you should go for registration in each of the states separately. When you are operating in a same state, okay, you have all your place of businesses in one state only, but still you can go for multiple registration for each of such place of business separately, but that is optional. Okay. So either because of that mandatory reason or because of this optional reason, if you applied for multiple registrations, then each of such registration has to be treated as a distinct person. So what is meant by distinct person? Sir, logically we think all the branches belongs to one person only. So we may think all the branches as one person. But GST says like what? No, even though they are linked with one person, one PAN number only, but every registration treat it as like a separate person. That's called the concept of distinct person. Okay. Then here, sir, treated as establishments of distinct persons. What is this? See, a person has two branches. Like one is like, let's say, sir, you are operating petrol bunks. You have one petrol bunk in Telangana, one petrol bunk in Andhra Pradesh. In Andhra Pradesh, along with petrol, you will sell automobile spare parts also. Like what? Engine oil, all the other spare parts also you are going to sell in Andhra Pradesh. Whereas in Telangana, you are not going to sell anything. So now tell me one thing. Petrol, is it under GST or not under the GST? Not under the GST. What petroleum products are there, sir? What are called petroleum products, sir? High-speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, natural gas. All these we call them as like HP man. So these set of petroleum products are non-taxable supplies currently out of the scope of GST, right? So those petrol, okay. So that means what? If you have a petrol bunk, you are not required to register. You need not required to pay any GST. So in Telangana, you have a petrol bunk, but you didn't register. But in Andhra Pradesh, the problem is you are not just running a petrol bunk. Along with that, you are selling even automobile spare parts also, which are taxable. So in Andhra Pradesh, you registered. Telangana, you didn't register. Both branches belongs to whom? You only. So this person has two establishments. One in Andhra Pradesh, the other one in Telangana. One is registered, the other one is not registered. Both will be considered as what? Still, they will be considered as what? Distinct persons. Sir, why it has to be explained? Sir, in the previous point I said like when you have multiple registrations, I said each of such registration has to be treated as a distinct person. Here there are no multiple registrations. One branch is registered, the other branch is unregistered. But still, since they are in two different states, we have to treat them like as two different persons or like distinct persons only. That's the concept here. Okay. So in workbook, sir. So the first question will be about this only. It's okay. It was like asked in exam, sir, once in December 2023. So they asked the like what? Explain about related persons and distinct persons. Such persons are officers or directors of one another business. They are legally recognized partners, employer and employee. So any person directly or indirectly controls or holds 25% or more. One of them directly or indirectly controls the other. Both of them directly or indirectly controlled by a third person. Together they directly or indirectly control a third person. They are members of same family. Okay. Then the person also includes what? Legal persons. When like what? When one person is acting as a sole agent or sole distributor. Then distinct persons. Every place of business where separate registration is obtained, will be considered as what? Distinct person. A person who has obtained or required to obtain more than one registration, whether in one state or more than one state, in respect of each such registration be treated as distinct persons. Next. Where a person has obtained or required to obtain registration in a state, has an establishment in another state, Okay, sir, why they are saying here just establishment? Because it is not required to be registered. So, okay, then one registered one is there, the other one is like just an establishment. Then also both will be treated as what? Establishments of distinct persons. Okay, then, sir, usually consideration means what? Any amount paid or agreed to be made, whether in money or otherwise. Okay, consideration means the amount paid or agreed to be paid. It may be in money or even otherwise also. It should be in relation to what? Supply of goods, services, or both. So the money paid or agreed to be paid in relation to goods, services, or both. It could be paid in money form or even in non-monetary form also. Okay, and the next fourth point. It need not to be paid by recipient also. It could be paid by any other person also, whether by recipient or by any other person, but shall not include any subsidy given by central and state government. Look at this example, sir. Telangana government wants to give laptops at a concessional cost to government school students. Then what? HP company is giving a laptop to a government school student at only 10,000. Okay, the other 20,000 is paid by whom? Telangana government to the HP company. Okay, now what happened? This 20,000 paid by government is called as what? Subsidy. Subsidy will not be counted as consideration. So even though HP company received 30,000 money, how much is the consideration? 10,000 will only be called as consideration. Okay, then consideration even includes the monetary value of any act or forbearance to act is also called as consideration. Sir, usually for supplying goods and services, here what they said, you said like you will not do something or you will tolerate something. For that also if any money is paid, that also called as what? Consideration. Sir, what is called forbearance to act? Okay, sir, let's say, sir, it's okay, restraining to do and all will come. So what is restraining to do and all? Like let's say, sir, in upcoming hero, sir, a production house has entered into an agreement with that hero that for the coming 3 years he has to act only with that particular production house. He'll not be acting with any other production house. So in this 3 years he's gonna act 3 movies. For every movie the consideration fixed is like 10 crores, 10 crores, 10 crores. This 30 crores is for what? Acting. That is the service, that is supply only, no question about it. For not acting with any other producer in this 3 years, they're gonna pay another 15 crores extra. 30 crores is for every movie 10 crores. Extra 15 crores for what? For these 3 years, not acting with any other producer, they're gonna pay extra 15 crores. That is for what? Monetary value of any forbearance to act. Sir, just because I mentioned here act, it doesn't mean like acting only. It's okay. It could be even like a faculty also. Like let's say a faculty teaching in BCCA. Now, for teaching in BCCA, let's say BCCA paying like some yearly some 15 lakhs. Okay, teaching in BCCA. For not teaching elsewhere, not teaching any other institution, if extra some 5 lakhs is paid, that extra 5 lakhs is what? Forbearance to act is also called as what? Consideration. Then works contract. What is called works contract, sir? Works contract means it's a contract related to immovable property and it involves both supply of good and services like construction, okay, repair work, alteration, modification, fitting out, all this will come under works contract. Then taxable person. Who is called taxable person? A person who is already registered or who has the necessity or liability to register. When the necessity arises, when the turnover exceeds threshold and all, okay, then he is called as what? Taxable person. Then principal. Who is called principal? Principal means a person on whose behalf agent supplies or receives goods, services or both. Okay, principal means a person on whose behalf agent supplies or receives goods, services or both. Then who is called agent? Agent means a person, sir, both definition interlinked only, sir. Principal means on whose behalf agent supplies is called as principal. Principal means, now agent means what? Agent means out of these names, whatever the name you call, broker, auctioneer, delectatory agent, commission agent, mercantile agent, whatever the name he is called, or he may be called with some other name also. But ultimately what he is doing, He carries on the business of supply or receiving of goods, services, or both on behalf of some other person. So ultimately what he has to do, he supplies or receives on behalf of some other person, then he is called as agent. This name is not relevant. If he supplies or receives on behalf of some other person, then he is called as what? Agent. But he may be called with any of these names, but still he is called as what? Agent only. Okay. So with this, sir, we can go into the supply concept, sir. Sir, supply. Section 7 is about supply. Supply section 7 has 3 parts. Section 7 subsection 1, 7 subsection 1a and 7 subsection 2. So what we gonna discuss, like, sir, if you are following my handwritten, correct this, sir, here. Okay, here 7 subsection 1, here 1a plus schedule 2, here schedule 3. Okay, so what is the point here? Sir, the 7 is, the role of section 7 supply is what? First, to tax a transaction under GST, first it should be a supply. I mean, supply is the triggering point to levy or to invoke GST. So only when supply happens, GST can be levied. Okay, so when it is called as supply. Further, sir, they have laid it in like 3 levels, sir. Section 7 subsection 1. Within that again there will be subsections also. 7 subsection 1 clause A, clause AA, clause B, clause C. Then, so the whole role of 7 subsection 1 is like, we gonna decide a transaction as supply. Okay, here. See, this is 7 subsection 1. Again it has clause A, clause AA, clause B, clause C. Okay, so here under 7 subsection 1, under different scenarios, when we can call it as a supply, that we gonna decide. Once we decide it as a supply, then we'll go to 7 subsection 1 clause A, I mean, which is read along with schedule 2. What is the role of it? This supply will be again categorized as supply of good or supply of service. So to decide supply of good or supply of service, this plays a crucial role. Okay, then we'll go into the third phase. What is third phase? Sir, third phase consists of certain negative list of transactions. Whatever happened, those are not supplies. They may have all the essentials, all the ingredients are there in the transaction to call it as supply. But just because it is mentioned in this particular list, negative list, they are not called as supply. Okay, so here it is passed, here it is passed. But once we go into this, and in this list, if a transaction is covered, then it is not a supply. So what should have happened? The transaction which we are referring shouldn't be there in the negative list. Then only it is called as supply. If it is there in the negative list, then it is neither supply of good nor supply of service. Okay. Now 7 subsection 1. Sorry, it has clause A, clause AA, clause B, clause C. Okay. So here ultimately what they're gonna do? They're gonna explain when a transaction can be called as supply. Okay, sir, in general 7 subsection 1 clause A talks about the general picture. In day to day, 99% of the transactions we see will be covered under 7 subsection 1 clause A itself. What is supply? Supply includes sale, transfer, barter, exchange, license, lease, rent, disposal. So okay, so to call it as a supply, there should be sale. Sale, what usually we'll do, like goods will be given or service will be given, for that money is collected, sale. Transfer also same. Then why 2 words kept? Sir, previously in the VAT Acts and all, they used the word transfer. Now to avoid a conflict in GST and all, so they included both the words also. Sale is also there, transfer also there, no difference in meaning. Barter, what is barter, sir? In barter, no money is involved. For a good, another good might be exchanged, or for a good, a service might get exchange, but no money involved. Then that is called as what? Barter. Then exchange. What is exchange? In exchange also, good and service gets exchange, but a part monetary consideration also might get involved. example, you exchange your old mobile and you will buy a new mobile. Okay, what will happen, sir? You will give old mobile and pay some monetary amount also. That's called what? Exchange. Then license. License means what? It's a permission to operate. To get that permission, you will pay license fee and all. Okay, to operate a toll. So you should have what? Toll license. Right, to do mining and all, you should have that mining license. Then lease, rent. Lease, rent, both are same only. So okay, but in general, sir, lease is long term in nature, rent na short term in nature. Then disposal. Sir, disposal means, sir, let's say BCCA, what it sells usually? Service it will sell. Okay, it will not goods na, books it will sell, and then service na, classes and all we gonna sell. So sale of books or sale of classes is the major business of BCCA. But there are some unused or old air conditioners are there, or some repaired benches, old benches are there. If these are being sold, then usually they are not the stock of BCCA. They are like fixed assets of BCCA. So those kind of assets which are not stock are being sold, then it comes under disposal. Okay, sir, in odd circumstances and all, like let's say there is a garment shop. Sir, usually a garment shop will sell shirts and all like in like one item, two items, maximum like 5 pieces, 10 pieces at a time. Then it comes under what? Sale only. But you want to close the shop. So you are selling the whole clothes in a bulk. Then it comes under again disposal. Okay. So when you are selling the goods at the time of closing a business, okay, to dissolve a business, then it comes under disposal. Or other than stock, if any of your assets you are selling like plant and machinery you sold, or furniture you sold, then that comes under what? Disposal. Okay, so supply includes sale, transfer, barter, exchange, license, lease, rental, disposal. So okay, any of this should have happened. Okay, who should do this? It has to be done by a taxable person. Who is called taxable person? A person who is registered or who has the liability to register. That person is called as taxable person. So taxable person should do any of these things. Okay. Why he has to do? For a consideration. What is consideration, sir? Already discussed. Amount paid or agreed to be paid. Money or otherwise. In relation to goods, services or both. Paid by recipient or by any other person. Okay. Consideration. Okay. Any of these activities should have been happened. Who has to carry out this? Taxable person for a consideration, and obviously in relation to goods, services or both. Okay, and it should be in the course or furtherance of business. Sir, there is a sole proprietor, sir. He has an office and he has a residence also. If he sells an air conditioner which is not working from his house, will it come under the supply, sir? He is a registered person only. Okay. There is a sale, old AC sold for 3,000 rupees. There is a sale. Then he is a taxable person. 3,000 is their consideration. Old AC also, still it comes under the definition of good. But what is not happening, sir? What is missing? Not in the course or furtherance of business. That is related to his residence. Hence it is not a supply. So to call it as a supply, 5 conditions, sir. Any of those activities like sale, transfer, barter, exchange, license, lease, rental, disposal. One activity should have been happened. That was done by a taxable person for a consideration relation to goods, services or both in the course or furtherance of business, then it is called as supply. Then 7 subsection 1 clause A. Sir, this 7 subsection 1 clause A is also supply. Okay, this in general also will feel like supply only. Okay, but why the clarification or why separately? Sir, in 2017 when the act introduced, till 2019 this subsection is not there. Then they introduced it to bring more clarity. Okay, previously also majority believed like it was supply only, it was covered under the general part only. But the other segment, the 10%, 5% people who think it is not a supply also, for them also to make it clarified, it was included in the definition of supply. What happens, sir? See, there is an association here. Okay, in this association there are 1,000 members. What these members thought? Okay, Diwali is coming. So this 1,000 members thought like when we buy crackers individually, we are paying like so much of money and all. So we'll buy group as a group. So 1,000 members pooled money. Okay, and association now had a lump sum money. How much, sir? It had some 20 lakhs. Now with this 20 lakhs, association directly went to a crackers store, warehouse, directly in Shivakasi. Okay, from there they paid 20 lakhs and bought a truck of crackers. Now understand, sir. Sir, this crackers guy selling crackers to association is a supply. In generally discovered. Why? Sir, this cracker shop, sale it is doing for a consideration. It's a taxable person. In the course or furtherance of business. Crackers, not goods only. So all are satisfied. So it is what? Supply. Now come to association. Now what association has to do, sir? It has to distribute them to each member. So what association is doing? It is giving a packet to each and every member and collecting their share 2000. Okay. Now if you see, this also sale only, right? Okay. First association purchased and now association is selling. So what is missing? Outsider na he'll take much more bigger margins. Association their person only na, so that's why what? It will not take any extra margin and all. It will only recover its cost. But whether it is profit or non-profit, it is irrelevant for a year in GST. We are thinking whether it is a sale or not. Sale only, right? So association giving each packet to member and collecting 2000. So this is also sale, supply only. So previously also we'll think it as supply. But what the problem is like, there is a concept called principle of mutuality. Okay, if you invoke principle of mutuality, members and AOP are treated as like same. I mean, they are one and the same. Firm and partners are treated as one and the same. Sir, if you invoke that particular principle, what happens? AOP and members are one and the same. Since they belong same person, it won't be called as supply. Sir, when you sell to yourself, you cannot call it as supply. Okay, that particular logic came. So, okay, to make sure that what the now 7 subsection 1 clause A says, like there is no principle of mutuality and all. Okay, so what it does, it says any person other than individual, that means it could be an association, it could be a firm, it could be a company, carrying activities or transactions with whom? With its members for cash or deferred payment, then it amounts to supply. So now what it is clarified, so there is no principle of mutuality and all. AOP distributing crackers and collecting 2000 from each member will amount to supply under which clause? 7 subsection 1 clause AA. Then 7 subsection 1 clause B. What is 7 subsection 1 clause B, sir? 7 subsection 1 clause B says like import of services for a consideration is supply. Import of services for a consideration is supply, irrespective of in the course or furtherance of business or not. So usually what we said in general conditions, to call it as a supply, it should be in the course or furtherance of business. But in case of import of service, you just check whether there is consideration or not. Okay, import of service, there is consideration, it amounts to supply. Whether it is related to business or not related to business or irrelevant, it is still called as what? Supply. But there is an extension, sir, we're going to discuss it. Okay, see. It's okay, sir, import together we'll discuss. There is one more thing, import related. Next one, 7 subsection 1 clause C. Okay, 7 subsection 1 clause C consists of transactions which are treated as supply even though there is no consideration. Okay, sir, actually before GST, all the earlier indirect taxes and all, to tax, one of the main thing to be checked is consideration. It's okay, in the prior laws and all. Okay, before GST, if there is no consideration, they never treated it as like a taxable transaction. But GST changed it and said like, even though there is no consideration, still they can be called as supply. But when? Okay, those situations are given in Schedule 1. The transactions which are treated as supply even though there is no consideration. One among them is import of service. Sir, we already discussed one import of service. What is that? Import of service. If there is consideration, it is supply irrespective of business related or not. Now even in Schedule 1 also there is an import of service. What does it say? Import of service amounts to supply even though there is no consideration. But there are 2 conditions to be satisfied. What are those 2 conditions, sir? First one, supplier and recipient should be related. Supplier and recipient should be related persons. And then see, sir, supplier and recipient should be related persons and it should be in the course or furtherance of business, then it is called as supply. So look at the chart now. Import of service with consideration, without consideration. With consideration, Whether it is related to business or not related to business, still it is called as what? Supply. Okay. If there is no consideration, then to call it as supply, two conditions has to be satisfied. What are those two? Related person should be in the course or furtherance of business. Then it is called as what? Supply. Okay. This is as per schedule 1. Okay. So now, sir, import of service has an exemption also. So now we are going much more deeper, sir. Import of service with consideration supply. Without consideration also, when two conditions are satisfied, it is called it is what? Supply only. Now much more deeper, sir. Import of service is exempted also. When it is exempted, there is an import of service for a consideration. Import of service for a consideration, but if it is for personal purpose, not for business purpose. See, import of service for a consideration, not in the course or furtherance of business. And the importer is whom? Government, charitable entity or an individual. Then such supply is what? Exempted. Sir, I am learning Spanish from a Spanish tutor. It's okay. He teaches me Spanish and all. So every day I attend Zoom sessions. In Zoom sessions, he will take me classes. Okay, like he'll teach me Spanish and all. Then what? It's an import of service. I am an individual. And obviously Spanish is for my personal purpose only. No business involved in that. So that is what? Exempted. Let's say for learning Spanish, I am paying some 50,000 as consideration. That is what? Exempted. So import of service, if it is for personal purpose, even though there is consideration, the importer should be whom? Government, charitable entity or an individual. Then it is what? Exempted. The next one, sir. Like there is an engineer in Dubai. So from that particular engineer, I took a plan. It's okay, for construction of my building. For that plan, he charged 1 lakh. For that plan, he charged 1 lakh. Now there what? Import of service is there. Consideration is also involved. But the building is my residential house. For my house related. So I'm an individual. Sir, understand what are the points? Import of service is there. Consideration is also there. But what is missing? Not for business, personal purpose. But still it can be called as what? Supply. We're going to decide whether it is taxable or exempted. To become exempted, what? The importer, me, should be what? Either a government or charitable entity or an individual. So who am I? Individual. Okay. So since I'm an individual, this is what? Exempted. If at all the importer is a firm, if it is a company, then that is what? Supply only, no exemption applies, and it is taxable under RCM. Sir, what is RCM? Reverse charge mechanism. Sir, by default, by default in GST, supplier pays tax or recipient pays tax? Supplier is the one who pays the tax, but he collects from recipient. That is the default mechanism. But what happens in reverse charge mechanism? Recipient will only has to pay the taxes. Understood, na sir? So here, import of services, what happens? Supplier will be outside India. So obviously government cannot collect taxes from him. That's why from recipient only they will collect taxes. RCM is applicable. Import of service, if it is taxable, except for OIDR services, it is RCM only. Except for OIDR services, it is RCM only. See here also. See, import of service, no consideration. Still it is what? Supply. If it fits into schedule 1. Supply, taxable under what? RCM. So what is called OIDR service, sir? Sir, OIDR service na online information data access and retrieval services. See, the service which delivery is mandated by the delivery of such service is mandated only through information technology over internet or electronic network. Such service cannot be provided when there is no internet or electronic network. What service? So you can listen to my class face to face. But those people who are like listening through online or in YouTube, those people cannot listen when there is no IT or internet or like electronic network. So that's why what? This YouTube related, when they are listening to classes and all, it comes under what? OIDR. Okay. Then see, nature of service essentially makes it automated with minimal human intervention. Sir, live there is human intervention. But once it is a recorded class uploaded, you can watch it at your convenience. Every time there is nothing done from my side. Once I get uploaded, my job is done. You can watch it anytime. You can watch it at any pace, any speed you want. Okay. So that one. Third one, sir, it is impossible to provide such service in the absence of IT. So if there is no information technology, obviously we cannot provide this kind of services. So then they are called as what? OIDR services. Okay. See, OTT platforms like Netflix, Amazon, all these gaming apps. Okay, this Free Fire, PUBG, all those, and such services are provided in the apps. Okay, and then social media platforms, Instagram. Okay, all these. Okay, and even cloud. Okay, cloud platforms are like cloud computing may be done on cloud using as a storage and all. Okay, so what is cloud and all? Na? We store our photos and all in Google Photos, Gmail. All these will come under what? OIDR services. Okay, so OIDR services exemption is not available, sir. See, exemption not available on OIDR services. So let's say, sir, it's okay to merge this classes and all, or to edit and these classes and all, we use an app called Filmora. Okay, now to Filmora there will be a subscription. So okay, the subscription and all, okay, it will ask it in dollars only. That means what? Supplier outside India. From there we are taking what? Import of service, and he is providing it to an individual. So let's say not to BCCA, I took it personally. Usually what it is? Exempted. But that is a OIDR service. Why? Because all this photo editing, video editing and all is being made what? Through online only. If there is no internet now, that processing and all cannot be made. So that OIDR services is not exempted, it is taxable. Even Instagram, sir. Instagram operates from where? Outside India only. Okay, the supplier located outside India. We are here a recipient. So okay, what we can do? So we can do boosting to our posts. Okay, boosting now, like it will be presented to more number of audience and all. Your reel or your post can be pushed to more number of audience. And for this blue tick and all also, like for that verified account and all also, you need to pay some amount. So all that is what? You are taking a OIDR service. OIDR service. Okay, and you are an individual only. Not for business purpose, for personal purpose only. But still it is what? Taxable, since it is an OIDR service. Other than OIDR services, na, exempted. Okay, na, sir? This is what? 7 subsection 1 clause B. Now we are moving on to 7 subsection 1 clause C. Already one point we covered, sir, in 7 subsection 1 clause C. What is that point? 7 subsection 1 clause C. Import of service, even though there is no consideration, it amounts to supply. But what are the conditions to be satisfied, sir? Both should be related persons. Both should be related persons, and it should be in the course or furtherance of business. It should be in the course or furtherance of business. Okay. Now, so next point, sir. What? There's a principle. When a principal supplies, goods to agent, okay, or agent supplies goods to principal supplies goods to agent, or agent supplies goods to principal. Both ways, sir. There's not like one way. Either principal supplies to agent or agent supplies to principal. In any case, if there is no consideration between them, then we call it, then they are referring it as what? It is not a supply. It is not a, sorry. So even though there is no consideration, still it can be called as what? Supply. Even though no consideration, still it can be called as supply. Sir, why principal will send to agent, sir, without consideration? Sir, you know the basic consignment chapter you learnt in foundation level. What happens? Okay, first, sir, principal, he want to sell his goods much more. So let's say, sir, I want to sell BCCA books like in each and every corner. Let's say, for example, in Chennai, there are like 2-3 bookshops where this law books and CA, CMA books will be sold. And same way in Mumbai, Pune, in all different places and all, they'll be selling this law books and all. So now, if we want to like promote initially, what happens, sir? Once we go to some Kolkata and we'll say like, okay, these are BCA books, they have a lot of demand. If I say also, because that bookstore guy may not know that. It's okay. So what we have to do, sir? If we say like, this is the price, you buy it for this, and students will come and buy from you, you can buy it like 1,000 rupees and all, he'll not trust us. What he'll say? You will sell your books and you'll go. If nobody will buy, then I have to suffer the losses. So what we have to do? Even though he doesn't pay anything, we need to keep like what? Stock first. Once a customer comes and if he is able to sell, then what he will do? He'll give back our money by taking certain part of commission and all. That's how the most of the transactions will work. The dealership and all will call. Okay, once you are acting as a dealer and all, what happens? You will not pay anything, but your principal will send you stock. Once you sell them, you will take a little bit commission and again balance you will be paying back to the principal. So now principal sent you stock without any consideration, right? Sir, understand? Principal send me goods without any consideration. So even though there is no consideration, still it can be called as supply. Sir, why it is kept? Why it is kept now? Sir, previously people taxed or the transactions are taxed only when there is consideration. So now what the thought means, see, here principal is there, here another person is there, like let's say he is a job worker. So you know who is called job worker? Job work means he do some job work activities and all. Let's say for example, job work activity means like, let me give an example of like, let's say sir, I have a textile brand. I own a textile brand, but I don't hire the tailors on my own and all. So okay, what I'll do? I'll buy the cloth in bulk. Okay, I have hired 50 tailors, but not at the same location. They may be at different locations and all. Okay, so now what I'll do? I'll send them the cloth needed, the threads needed, the designs needed also. They'll stitch according to my requirement. They'll put my brand and give it to me. So okay, then they are called as what? My job workers. Now me as a principal, I'm sending stock to job worker. I'm sending stock to job worker. Why I'm sending? They'll process them and again give it back to me. Okay, so they have to give it back to me. Then it is a genuine transaction only. It need not to be treated as supply, because I sent there for what? Processing only. Okay, I sent there for processing. Once the processing is done, it has to be returned to me. But actually it's not done. So understand, sir, I was making a transaction in such a way, colorable transactions are all this. What colorable transaction? On record I am showing like I sent for processing. Sir, if I sent for processing, they have to be returned like within 1 month, 2 months, 3 months. There should be some time limit, right? Maximum within 1 year it has to come back, right? But even after 1 year also they are not returning. Then what? Then what? I have diverted it like actually I sold goods. But on record I am showing it as like what? Some processing for purpose and all I sent. Okay, they are going to come back after 6 months, after 7 months, and I am showing it on record to avoid GST liabilities and all. So they want to counter that. That's why what they are saying, like, even though there is no consideration, still it would be treated as supply. Sir, not in every case it would be treated as supply. Okay, in this kind of cases only. Sir, how do we identify? Sir, they are saying like, for deciding whether it is a supply or not, invoice is the deciding factor. In that case, if invoice is raised from principal to agent, then only it has to be treated as supply. For that, sir, section 143 will come. Section 143 is about job work procedures. What does it say? Means, if within 1 year, the goods are not returned by job worker. Within what time, sir? 1 year, the goods are not returned by job worker, then supplier, the principal has to raise a invoice. Once he raises an invoice, it has to be treated as a supply. But to call it as a supply, the basic condition, consideration is there. No, but still it is called as a supply because it is mentioned in Schedule 1. Understand, sir? So where any goods are transferred from principal to agent, even though there is no consideration, it still be called as supply. But the important point is like there should be an invoice. Only when invoice is raised between principal and agent, then only it is called supply. If no invoice, no supply. Okay? But where invoice raising option or invoice raising need will come, that need will come because of job work requirement and all. Okay, na, sir? Okay? See this one also. Situation, principal supplied goods to agent and agent supplied goods to customer. See here, sir. Sir, here even though goods sent to agent, agent is not raising any invoice. He just display the goods. If any customer comes also, he'll show the goods. If it has to be billed, he'll call his principal only. Principal only raises the bill in the name of customer. Then there is no invoice between principal and agent. So even the goods are sent to agent place, it is not a supply because agent just acting as like a storekeeper, as like a just an employee. But here, sir, principal sent goods to agent and even raised an invoice to agent. Even though no consideration involved, still it has to be treated as what? Supply. Okay, still it has to be treated as supply. Okay, then interest and discount, sir. Look at this point clearly. Sir, bank given a loan and you repays loan plus interest. Interest taxable or exempted? Exempted. Okay, look at this case. A car showroom, sir. They sold car for 25 lakhs. Okay, but you purchased on higher purchase basis. Okay, so there is car plus price plus interest involved. Sir, usually cash price is only 20 lakhs. But since you are purchasing on higher purchase, the car price is how much? 25 lakhs. Out of this 20 lakhs is what? Car value. 5 lakhs is interest value. Is there any exemption applies here? Interest part exempted only now usually. But here what is happening means interest not charged individually. It was bundled along with supply of car. Sir, a car showroom, to earn interest it will sell cars, or to sell cars it is earning even interest also. Na? Which is main? Selling cars are earning interest, which is main? Selling cars only main. Since, sir, here composite supply logic will come. What composite supply logic? When the multiple goods are there, whichever is the predominant thing, principal supply, that rate only has to be applied on the total bundle. Here car is the predominant. Car has, let's say, 12%. Then the 12% has to be applied on the total bundle. Even though interest individually exempted, since it became a part of a bundle, it also becomes taxable. Are you able to understand, sir? Sir, then this declaratory commission agent, sir, understand this logic. This is a clarification. Declaratory commission agent means this sir, first understand, normal agent, he will not bear any credit risk. Sir, let's say I am a principal, you are an agent. I send goods to you. Okay, and you sold goods to a customer. If customer is not paying, it became a bad debt. Even though you are agent, you will say like what? You will not take any risk. You will say the same thing to me and I will only has to bear that loss. But if you are a declaratory commission agent, then what? Credit risk has to be bared by you. Okay, agent only. Then such agent is called as declaratory commission agent. Sir, why agent has to bear? Sir, understand. Let's say MRF company is the principal. You are the agent here. Okay, declaratory agent. MRF company sent tires to you. Here local guy, your friend only, he came to you and asked, like, came to your shop and asked like, I want some tires for my tractor and all, so please provide me the tires. Okay, you know him from childhood and all. Okay, so he is known to you, not to the MRF company. You called and said to the MRF company like what? He is my friend only. Okay, you can give him any credit and all. He is like loyal person and all. And you said to whom? MRF company. Then MRF said like what? He is loyal to you, not to us. We don't even know him. Okay, if you have so much of trust, you bear the credit risk. We will not bear the credit risk. That's why. Okay, now if you bear the credit risk, then you are called as what? Declaratory commission agent. But understand, sir, since you are bearing risk, you will take premium also. Since you are bearing risk, you will take what? Premium also. So understand, sir, this is a linked clarification to the previous point. What does this one means? Sir, usually, what is the main logic we said? If the invoice is raised between principal and agent, then only supply. And agent to customer also, if there is invoice, then agent to customer also it is supply. If directly principal to customer, if invoice is there, then the supply is only between principal and customer. Between agent, there is no supply. Okay, now what? Extra interest element also included. When declaratory commission agent is there, he is bearing credit risk. Normally, he may sell the good at 1 lakh, but now he is bearing the credit risk. What he will do? Since I am bearing the credit risk, that guy is bearing the credit risk, he'll ask for 1,10,000 or 1,05,000. That extra amount is also there. Now, how to treat that is the question. See, principal invoiced directly to customer. Situation 1. Then what? Only between principal and customer only it is supply. Not a supply between principal and agent and customer. If principal invoices to DCA, then between principal and DCA also supply, DCA and customer also supply. See, in situation 1, what happened between principal and agent? Goods are there, but no invoice, not a supply. DCA to customer also, goods is there, invoice not there, hence not a supply. But not only goods, sir. In DCA transaction, declaratory commission agent, what extra is offering? Credit extension also offering. But credit extension has become an individual transaction here. Sir, understand? Who is raising invoice? Principal raising directly to customer. That means goods supplied by whom? Principal. So agent, even though he is handing over the goods, it will be counted as supplied by whom? Principal only. Now agent only giving credit risk. Offering credit. For that he is getting interest element. So interest is an individual transaction. Hence it is what? Exempted. But it comes to situation 2, what is happening, sir? In situation 2, what? Principal raises an invoice to agent. So between principal and agent, it is a supply. Agent and customer also, goods is there, invoice is also there. So in situation 2, who will be counted as supply, who will be considered as supply has been made? Agent only made a supply to the customer. Now what is happening? Agent made supply of goods and even offered credit also. So both involved, hence the total bundle will becomes taxable. Okay, so both good and credit extension becomes taxable in situation 2. In situation 1, nothing is taxable between agent and customer. Okay, so we discussed only 2 points in schedule 1. First one is what? Import of service, even though there is no consideration, it amounts to supply. What are the conditions, sir? Both should be related parties and it should be in the course or furtherance of business. Okay, second one, where any transfer of goods between principal and agent or between agent and principal, even though there is no consideration, it amounts to supply. Sir, you need not to write all these and all. You just write this simple line, it is enough to call it as like here. Supply of goods between principal and agent is a supply even though there is no consideration. However, which is deciding factor? Invoice. But this points are writing easy only. But to explain it only, I have to write so much. And then extra I discussed this declaratory agent clarification also. Okay. Then third ones are here. Supply of goods and services are both between related persons and distinct persons amounts to supply even though there is no consideration. Between whom, sir? Related persons and distinct persons, even though there is no supply, it amounts to, even though there is no consideration, it amounts to supply. Sir, why? Why na? Here, sir, import is done, then principal and agent is done. Then see, sir, you have a branch in Hyderabad, you have a branch in Vijayawada also. Sir, GST is like origin based tax or destination based tax? Destination based tax. What is the meaning of destination based tax? All the tax revenues should go to destination state. Central government half will go, the other half should go to whom? Destination state. Say, okay, you have 2 branches, one branch in where? Hyderabad, the other branch in Vijayawada. Okay, now the car, like let's say from the manufacturer, the car was purchased by Hyderabad branch. From manufacturers, the car was purchased by Hyderabad branch. Sir, in that case, which is the destination state? Hyderabad means Telangana. The taxes went to which state? Telangana, the taxes went. Okay. Now, to Vijayawada branch, a customer came and asked for a particular model car. That car is not available in Vijayawada branch. So, what usually these car showrooms, bike showrooms and all will do? If that particular model is not available in that branch, will they lose customer? Okay, they'll contact with their other branches also. It is there in Hyderabad branch. What they will do now? Sir, wait for 1 day, sir, we'll get it from Hyderabad branch and all, they'll tell. Okay, now to Hyderabad branch, the car is transferred to whom? Vijayawada branch. Will there be any consideration? No, just the car came from Hyderabad to Vijayawada. Okay, and now it was given. Since, sir, understand, from Hyderabad to Vijayawada, if it is not a consideration, not a supply, now what is happening? The car ultimately used in Andhra Pradesh. The destination state is what? Andhra Pradesh. But the tax revenue is struck with whom? Hyderabad only. So what? It is against to the principle of destination based tax. To make it correct, what? Even though there is no consideration moving, but still the car when it comes from Hyderabad to Vijayawada, you need to treat it as what? Supply. So then what happens? Again you will tax. Okay, the previously paid taxes and all you will claim as ITC, and again you will pay the tax. Now second time when you are paying, the Hyderabad, whatever the taxes initially given to Telangana government will get reversed and will be given to Andhra Pradesh government. So what? Destination based tax principle is working. So why this provision is inserted? To make sure that destination based tax principle works properly. Okay, na sir? See here. Okay. So in simple, sir, what? Where any goods or services or both supplied between related persons and distinct persons amounts to supply even though there is no consideration. Okay, but there is a proviso. Sir, employer and employee related persons or not? Employer and employee related persons only. Sir, most of these companies, when any festival comes means, they will be giving like some sweet packets or some small gift packets to employees. Now what? employer-employee related persons. What is the above provision we discussed? Supply of goods, services or both between related persons amounts to supply even though there is no consideration. So if they give any gift to employee, a sweet packet to employee, that also supply. On that also GST has to be paid. Now what employer feels? Giving itself is a waste of thing for us. On that again extra GST also has to be paid. Then they will not even give gifts also. Okay, that's why, sir, to control that particular point, I mean to give a relaxation to that place, what they said, where employer is giving gift to employee, you need to check aggregately in a year for each employee. If it is within 50,000, not a supply. Above 50,000, then the total amount will be treated as supply. Where employer gives gift to employee, aggregate value within 50,000, not a supply. Where the amount exceeds 50,000, then the total value is supply. Sir, here one more important point, sir, this one. Interstate movement of conveyance. Sir, bus is a good or not? Bus is a good or not? Good only. So let's say there are like so many travels and all. Morning Star is there, Kaveri is there, so many. Okay. There is a travel office in Hyderabad and Bangalore. Every day the buses will go on Hyderabad to Bangalore and again come from Bangalore to Hyderabad. Interstate, sir, look at the above point what we discussed. Supply of goods and services are both between related persons or distinct persons amounts to supply even though there is no consideration. Sir, every day a bus will go from Hyderabad to Bangalore. On bus value every day we need to levy what? GST. Sir, forget about passenger transportation service. I have a branch office in Hyderabad and main office in Bangalore. Now what happens? Every day from my main office 10 buses will start and they'll go to Hyderabad. From Hyderabad again another 10 buses will start and will come to Bangalore. Now every day on these 10 buses what we have to do? Levy GST. If you read this provision, see what is this again? Supply of goods between related persons. That only happening. Every day I am sending buses from one branch to another and this branch to that branch. On the bus value every day we need to levy GST. Is it possible, sir, practically? No. That's why they given a relaxation. When the goods which we are referring are like conveyance. Conveyance means what, sir? Which is used for transportation. Yes, bus means what? Conveyance only. So when conveyance, if they are moving interstate movement of conveyance, that also for transportation of goods and passengers, then on that conveyance value you need not to levy any GST. It is not a supply. Interstate movement of conveyance for carrying goods and passengers, not a supply. Sir, it was sent for repairs, sir. From Bangalore to Hyderabad I sent a bus to get repairs in Hyderabad, to get it repaired in the Hyderabad. Then to the repair extent you have to treat it as what? Supply. I sent it for further supply. Further supply what? I sent from Bangalore to Hyderabad to sell it in the Hyderabad. Then in such case it has to be treated as supply. But in the normal transportation case, if it comes from Hyderabad to Bangalore or Bangalore to Hyderabad, it is not a supply. Understood, sir? So 3 points done. Then the fourth one, sir. Permanent transfer or disposal of business assets on which ITC claimed. Sir, what? See, look at this one. Rajesh Electronics. Okay. He purchased like 10 TVs. Purchased 10 TVs. Okay. On those 10 TVs, ITC also has been availed. So he is an electronic store. To sell them in the store, he purchased 10 TVs. On all those 10 TVs, he availed even ITC also. 1 TV donated. 1 TV gifted. 1 TV transferred to residents. 2 TVs theft. 1 TV damaged by rat. Only 4 TVs has been sold. So now understand. First of all, the main logic, sir. Why ITC will be given? ITC is given to eliminate double taxation. So let me tell you the basic concept of ITC. Here there is a registered person. He has an inward transaction and he has an outward transaction. Sir, when he buys goods, on that also there is a tax levied. So when you are buying also tax will be levied, because when you are buying, someone is selling. So okay, there is already a transaction. So on this inward tax, inward supply, all there is a tax. When you are selling, again on this outward also there is a tax. Now what happening, sir? On purchase also tax, sale also tax, the good is same. Sir, I sell mobile phones, sir. I purchased mobile phones. On them already tax is levied. Again I am selling the same mobile phones. On that again the second time also tax is being levied. So what is happening here? Double taxation. Sir, double taxation is not good. Double taxation creates inflation. The prices of the goods will increase. When the prices of goods increase, people cannot afford to buy. When they cannot afford to buy, they will not buy them. Then the industry itself will collapse. So, okay, and this is like butterfly effect. One industry impacts another industry, and also total economy will be stagnated. Okay, to prevent that, what the prices should be affordable. So to do that, what double taxation has to be avoided. To avoid double taxation, what government says, like this tax you already paid at the time of purchase is there na, that you can set off, and the extra tax only you have to pay. At the time of purchase, whatever the tax you paid, that you can set off. The balance only, sir, you purchased for 10,000, on this the tax is 1,000 rupees, and you are selling for 12,000, on this 1,200 is payable. Now what the government is saying, like you already paid how much at the time of purchase? 1,000, right? The 1,000 set off. So now extra how much you need to pay? 200 only you have to pay. So this way of set off is only called as what? Input tax credit. Okay. So with input tax credit concept, what we are doing, instead of taxing the whole amount, we are taxing only the extra amount. Sir, extra amount means what? You purchase for 10,000, selling for 12,000. Na? Extra how much you added? 2,000. That 2,000 into 10% you do also how much? 200. That only you are paying. Okay. So GST is to avoid what? Sorry, ITC is to avoid what? Double taxation. In other words, ITC will be given only when there is double taxation. If there is no double taxation, then there is no ITC. Okay. Sir, here come to back to this point. 4 TVs sold na? When they are selling means double taxation, right? Sir, when you purchased 10 TVs, you availed what? ITC. And you are selling 4 TVs. When you are selling 4 TVs, there will be tax. So, with respect to this 10 TVs, 4 TVs only sold. So, for this 4 TVs availing ITC is justifiable only. But the problem is like 1 TV donated. Is it sale? Gifted. Not a sale. Transferred to residence, personal use, not a sale. Theft, not a sale. Damaged by rights, not a sale. But you already availed what? ITC. You are not eligible to avail ITC, but you already avail ITC. Instead of reversing the ITC, what they are asking you to do means treat these transactions also supply. Then what? Double taxation will come. You availing ITC will be justified. Understood, no, sir? Okay. So here in these cases and all, actually there is no supply. There is no consideration. But still we are deemed to be considered as what? Supply only. Okay. Otherwise what? You are unjustifiedly availing ITC. To make sure that ITC you availed gets reversed, they are treating them as even as a supply. What? Then what happens, sir? Again you will tax them. Whatever the ITC you avail, you will adjust with the tax payable. So nothing but the double taxation impact is getting justified. So permanent transfer or disposal means what? You purchased assets, availed ITC, and because of some reason other than sale, they are going out of your business. From your business they are going outside. Like what? Donated, sir. Once you donated, you cannot take back. Gift. So okay, you cannot, okay, now in good terms you given gift. Now some fight happens, you cannot ask them to give back your gift also. Okay, then transfer to residence, and then theft. No thief will bring it back. And then damaged by rats. So all these are permanently transferred. So they are not going to be come back. So all these also has to be treated as what? Supply, even though there is no consideration. So there are 4 points, sir, where it has to be treated as supply even though there is no consideration. What are those? First one, import of service without consideration. Supplier and recipient should be related. Price, in the course or furtherance of business. Second point, principal and agent or agent and principal, when there is any transfer of goods, even though there is no consideration, it is supply. But what is the deciding factor? Invoice is the deciding factor. Third one, where there is any supply of goods, services or both between related persons or distinct persons amounts to supply even though there is no consideration. There is a proviso, sir, there. What is the proviso? When employer giving gift to employee aggregately up to 50,000 for each employee in a financial year, it is not a supply. In excess of 50,000, then the total amount has to be treated as supply. Fourth one, permanent transfer or disposal of business assets amounts to supply even though there is no consideration, provided ITC has been availed on them. Then Section 7 subsection 1A plus schedule 2. 7 subsection 1A plus schedule 2. So what is happening here? Yes, even in GST also, if there is no ITC, then what? Double taxation happens. Okay, so now see, sir. 7 subsection clause 1A plus schedule 2. Supply to be treated as supply of good or service. Sir, so we completed 7 subsection 1. Now we are into what? 7 1A. What is the role of 7 1A along with schedule 2? To decide whether the supply has supply of good or supply of service. Sir, any place, ownership getting transferred, not possession. Ownership also transfers. Then what? Supply of goods. Sir, you purchase the mobile. Okay, you are not renting it. You are not taking it on rent. You will only become the owner also, right? So once you get the ownership, you will become what? Ownership means here nothing but title is transferred. Then what? Supply of goods. Only possession transferred. When you took on rent a bike or a generator on rent, or from library you took books, then all those cases what happened? Possession only you got, not the title or ownership. So it has to be treated as what? Supply of service. Then composite supply. Composite supply, which involves both good and service. Like what? Works contract. Works contract means what, sir? Let's say a construction contract you given for 5 crores. Like he only has to bring cement, iron, everything. He only has to constructing activity also he only has to take care. So there involves both good and service. But what it is, sir? Works contract has to be treated as supply of service. And restaurants also. There is both service involved, good involved. But again they have to be treated as what? Supply of service. But important point, sir. Ice cream parlors, bakeries are not restaurants. Ice cream parlors and bakeries are not restaurants. So their supplies has to be treated as goods only, not as service. Then intangibles. Intangibles, sir. If it is sold like a pre-packaged software, but these days we couldn't find them. But previously, sir, okay, before much widespread of internet and all, there are computers, but internet is like limited, not this much cheaper and all. So the older versions of laptops and all, sir, we used to upload the Microsoft, the OS and all also through a CD. Okay, the antivirus also will be sold through a CD and all. Nowadays we are just downloading the antivirus also from their website only. Okay, but previously we used to buy a CD and all. If you remember like your childhood also, like video games and all we used to play. The TV video games and all. Okay, every game now they used to sell a cassette kind of. Okay, so the Super Mario you played any time, sir? Okay, so all those games and all what? There will be like a cassettes kind of only they used to sell. So okay, once you keep that, the gaming software is loaded into it. Now it's just an app only. If you install that, the software is into your mobile. But those all these are sold like a, just like as audio cassettes. Audio cassettes, movie CDs, or DVDs and all. Okay, so when they are like pre-packed software, all those movies related or audio cassettes and all, they are what? Supply of goods. But when you are downloading from the web and all, like these days, then they are like what? Supply of service only. Or if any franchise is given, if any development of software is there, patent, trademarks, all this will come under what? Supply of service. Okay, now we are moving on to 7 subsection 2, sir. Transactions which are treated as neither supply of goods nor supply of service. Transactions which are treated as neither supply of goods nor supply of service. Schedule 3. First, sir, we completed 2 steps. First we decided supply or not. Then we decided like supply of good or supply of service. Then 7 subsection 2 helps us in deciding these transactions. In any case, these are not supplies. Okay. So you took a transaction, you passed the first 2 tests, but still it comes under this list, then it is not a supply. What are those? First one, funeral, burial, crematorium services, including transportation of the deceased. All these services are related to death and post-death. Okay, so they want to exclude this from taxability. Okay, so funeral, burial, crematorium services, including transportation of the deceased. Then second one, sir, this is important, has connections with other points also. Land and building. Sir, initially only I said Sale of land and building. Kuda service. Service. Okay, sale of land, sale of building, all this will come under service. But they don't want to tax every land and building to be sold, sir. But they want to tax when, sir, an apartment is being constructed. Okay, there you booked a flat. Sir, not at all constructed. They just laid a venture. A plan is given. You booked a flat. You paid advance and all. Then they are constructing on behalf of you and then handing it over to you. It's more or less like a works contract. You just paying the money and you are approving a design. According to that design, they are constructing and giving it to you. It's more like what? Works contract. But it may also get exempted from the taxability. That's why what they included it in the definition and they are taxing it. So what is included, what is excluded? See, where the consideration wholly or partly received before completion. Next one, entire consideration received after completion. So this building completed not yet completed. So, okay, sir, you may have differences like, sir, still there is some cement works are going on, so it is not completed. Sir, the definition of completion is like, either you get a completion certificate or occupation. First occupation, whichever is earlier. We already occupied, right? So what? Construction is completed only. Now if the building is sold, now when the consideration is being received, after completion or before completion? After completion only. Entire consideration is being received after completion. So now if you sell this building, it is not a supply. Okay, it is covered in the negative list. Okay, land always covered in the negative list only, because land is always complete only. So land always negative list only. Building, if it is a completed building and the entire consideration receives after completion only, covered under negative list. Then one, it is not covered under the negative list means the consideration received either wholly or partly before completion. The first case I said, like there is a venture is there, you just booked a flat there and you paid, so they said like the flat cost is some 1.5 crores. You paid some 30 lakhs as advance and then the work is going on. Then in installments you paid like another 20, 30, like that you are paying. So then what? Then it looks like more like a works contract, not like you purchasing like a building. You are paying money and he is constructing on behalf of you. So that's why it has to be treated as what? Works contract, where the consideration wholly or partly received before completion. Works contract, and it has to be treated as what? Supply of service. Then actionable claims. Actionable claims other than specified actionable claims. What are these? Betting, gambling, casinos, horse racing, lottering, online money gaming. Actionable claims are under negative list other than specified. That means what? Specified are taxable only. They are supplies only. Normal actionable claims divide into two types. Specified are others are. Specified, they are in supplies only. Other than specified, then they are in the negative list. Okay, which are specified? Betting, gambling, casino, horse racing, lottery, online money gaming. All these are what? Specified. These are like supplies only. Then functions performed by MPs, MLAs, members of local authorities, panchayats, etc. Sir, MPs, MLAs, members of local authorities, panchayats, these people, okay, for providing their services, they'll get some remuneration, like the consideration. That is covered under the negative list. Then services provided by an employee to employer in the course of employment. For salary, if employee is doing any work, that is covered under negative list. For salary. Beyond salary, if he is doing any work and for that a separate consideration is involved, then that comes under supply. Sir, he is an employee. Other than employee, he is doing some other works also, like some other filing related and all he is doing. For that he is getting a separate consideration. Then to that extent it is supply. So for the work he carried out, if he is getting salary, so to the extent of salary related, it is not a supply. It is covered under negative list. Then services by judiciary, like any courts or tribunals, when they provide services, all these are covered under what? Negative list. Okay, so this first 6 easy to remember only, but the rest all are only key. When initially act is introduced, there are only 6 points. Then slowly all these points also has been added, sir. Okay, so those are only little complicated to understand, so be little attentive, sir. So once again, what are the 6 points which we have discussed till now? Funeral, burial, crematorium, land and building. But when it is covered under negative list, entire consideration received after completion, negative list. When wholly or partly received before completion, supply only. Then actionable claims. Specified actionable claims are not covered in negative list. So what are specified actionable claims? Betting, gambling, lottery, horse races, all these things. Then MPs, MLAs related are covered under negative list. Employee providing services to employer in the course of employment, covered under negative list. Then the last one, sir, courts, that also covered under the negative list. Then this one, sir, this lead insurer, co-insurer. It's okay. I'm not reading it fully, sir. You'll understand it easily. So let's say Reliance Industries. You know, Reliance is the biggest oil refinery in India. So they have the biggest oil refineries. So for that, insurance has to be given. For Reliance oil and gas refineries, insurance has to be given. No one particular insurance company is daring to give the insurance for that massive project, sir, because something happens now, and that is oil and gas related. If once fire starts exploding now, it's not easy to control and all, and the damage will be severe, and the insurance company may almost will come into bankrupt situation once something happens to that one. So no one particular company wants to do that particular risk. That's why what happened, 3 insurance companies came together, like HDFC, Axis, ICICI. 3 insurance companies. So these are banks, and they provide even insurance also. So all these 3 together, they want to provide insurance. But HDFC plays the lead role. I mean, all the arrangements, terms and all will be discussed by whom? HDFC. Axis and ICICI will just take a share in the premium and will take the risk also a share. That's what. Okay. Let us assume like 50% risk is to HDFC, 25% to Axis, 25% to ICICI. Now everything will be dealt, discussed, everything by whom? HDFC only. Okay, now HDFC is providing insurance coverage to Reliance. Reliance is paying premium. So normally insurance service taxable only, no question about that supply. Now what happened? HDFC, sir, let's say 5,000 crores is the insurance premium. Now Reliance paid 5,000 crores, HDFC provided insurance. On that 5,000 crores, HDFC paid GST also. Okay, GST also paid. 5,000 crores plus GST, sir, that was paid by Reliance, and HDFC paid it to the government also. Now this 5,000 crores, total will be taken by HDFC only. Huh? What it has to do? A share has to be given to Axis and ICICI, right? So now HDFC is called as lead insurer. Axis and ICICI are called as co-insurers, because they are also taking the ownership. Okay, so now what? Co-insurers. Now what? Out of this 5,000, 50%, 2,500 has to be taken by whom? HDFC. 1,250 to Axis, 1,250 to ICICI. Now this distribution of premium between co-insurers amounts to supply or not is the question. You got the question, sir? When it is paid by Reliance, on that already GST paid by whom? HDFC. Subsequently it is distributed between HDFC to Axis and ICICI. That distribution is supply or not? It is not a supply. It is not a supply. That's what mentioned here. Okay. But what are the conditions, sir? Look at this provision. This is the provision. Activity of apportionment of co-insurance premium. Apportionment of co-insurance premium by the lead insurer to co-insurance for the insurance service jointly supplied by the lead insurer and the co-insurer. Okay, is covered under negative list. But subject to the condition that what? Lead insurer already paid the central, state or union territory, whatever is the GST on the entire amount. So, okay, HDFC since already paid GST, on subsequent distribution between co-insurers, it's not amounts to supply. Clear, sir? Then reinsurance. What is reinsurance? When insurance company to cover their risk, they will take again insurance with some other insurance company, or else from their insurance premium, they'll give a share to the other insurance, some other insurance company, which we call it as what? Reinsurance. The reinsurance is also not a supply. Okay, then 9th one, sir. What? Supply of goods from a place in non-taxable territory to another place in the non-taxable territory without such goods entering into India. Without such goods entering into India. Sir, what? You are in India only. You buy goods from Japan and sells in Australia. Directly the goods will go from Japan to Australia. What is happening, sir? Supply of goods from non-taxable territory, Japan non-taxable territory, to another non-taxable territory, Australia. Sir, what is called taxable territory? To the territory which GST applies is called taxable territory. To which GST applies? India only. So India is called as what? Taxable territory. So Japan non-taxable territory, Australia non-taxable territory. You are buying from Japan, selling where? Australia. Nowhere the goods came to India. Then it is not a supply. I mean, then it is not covered under the taxability. It is covered under what? Negative list. Okay, then. Sir, before bond to bond transfer, we'll discuss first high seas sale. What is high seas sale? High seas sale means, sir, you purchased goods from Australia. You are an importer. You purchased goods from Australia. The goods are still in transit. It's okay, they are in, sir, Indian customs waters, like first the territorial waters extends up to 12 nautical miles. Customs waters extends up to 200 nautical miles. Beyond 200 nautical miles, it is called as high seas. So the goods are in the mid-sea. Okay, you purchased goods. Actually, the voyage takes 2 months. I mean, once they shipped there, to reach India, it takes 2 months, let's say. So some 30 days has been passed. Okay, so that time, you purchased goods originally. But in between, you found some another good customer where he is offering you a better price. So what you did, you sold the goods to that person. Okay, so where the goods are currently? In the mid-sea, which we call it as like what? High seas. Then it is not a supply, because what? The goods are not yet reached India. Sir, one more thing, sir, one important thing for the next 2 points also, this is important. When an import is there, customs duty will be there, GST will be there. First customs, sir. Okay, see, first you should understand the scope of Customs Act. Then you will easily understand these points. So this is what? India. The goods reached India, then we call it as what? Import. Then that is under the scope of what? Customs. Okay, sir, this is like port. Okay, see, here reached port. When the goods are reached port, you will file what? Bill of entry. You will file bill of entry. Then this is like, assume the customs barrier. Customs barrier, na? Like assume like customs gate. Until the goods come out of customs gate, they are still in the scope of what? Customs Act. When they are under the scope of Customs Act, GST will not apply. Okay? The Customs Act scope is still when? Until the goods come out of the customs place. I mean the customs barriers, they are still under the control of what? Under the scope of Customs Act. So we cannot invoke GST. Okay? But the imported goods has 2 options, sir. What? One is home consumption, the other one is like warehousing. Home consumption means what? You will pay taxes immediately and you will take your goods to your place. That's called home consumption. So whatever I said now is valid for home consumption. But there is another thing called warehousing. So now warehousing, there are 2 types of warehousing. Private warehousing, public warehousing. So what does happens? See, sir, let's say this is the port area. Now, here itself there could be warehouses. Okay, here you can warehouse, that is one option. Or beyond the customs place also, you can warehouse them. Okay, but that is not available to each and every person, sir. Only if you are a status holder, you have some recognition, like authorized economic operator. So those people only has the permission to start their warehouses even outside the customs premises also. So even here also you have a warehouse. But understand, sir, even though warehouse is geographically outside the customs premises, it is deemed to be within the customs area only. Understand, sir? Sir, you are a star exporter. So the government want to encourage you. It's okay, they want to give you a recognition and some perquisites to you because you earn more foreign currency to the country. So what? They allowed you to keep warehouse wherever you want. So you kept warehouse beside your factory only. But even though it is beside your factory, the law assumes like that is within the customs area only. Sir, why it was allowed to keep nearby your factory? To allow you to get the goods much more easier, to prevent them from destruction, damages and all much more better way. They allowed you to keep the warehouse even outside customs premises. But the law feels like what? Even though it is somewhere, it still will be considered as within the customs premises, deemed customs premises only. Okay? So until they come out of customs premises, they are still under the scope of what? Customs Act only. So GST will not apply. Okay. Sorry, you warehoused goods. Okay, you warehoused. So now coming back to the GST point. What happened? You imported goods. Okay. You imported the goods and kept it in a warehouse. whether it is like outside, not outside sir, first I am referring to the within the port only, you kept goods in this warehouse. Okay, A imported and kept in the warehouse. Now when they are lying in the warehouse, B purchased them. Then again from B, C purchased. So now how many transactions happened sir? 2. A sold to B, B sold to C. Whether on these 2 transactions GST can be levied or not is the question. Sir, whether they came out of customs premises or still in the customs place only. Customs place. So which act applies? Customs Act only applies. So GST has no scope. That's why they were kept in the negative list. Okay. But this transaction we refer it as bond to bond transfer. Why bond to bond? When you warehouse goods, you have to execute a bond. So originally who executed bond? A. But now A sold to B. Now in the place of A's bond, whose bond will be replaced? B's bond. That's why it is called as what? Bond to bond transfer. Okay, that is not a supply. Okay. Now amendments are newly added point is what? The warehouse need not to be in the customs place. Outside. Okay. Here. Okay. Outside the customs premises, your warehouse is there. There A is originally kept in the warehouse. Now A sold to B, B sold to C. Then also it is not a supply. Why? Geographically outside the customs premises, but still within the scope of what? Customs Act only. So GST cannot be invoked on them. Understood na sir? See, bond to bond transfer. Imported goods warehoused and then sold within the warehouse. Then what? Not a supply. Now look at this sir. Supply of goods warehoused in a SEZ or free trade warehousing zone to any person before clearance for exports. See, goods imported and kept in what? SEZ area or free trade warehousing zone. By whom? A. A sold to B, B sold to C. So this is not a supply, this is also not a supply. Okay. C removes them from SEZ, okay, by paying the applicable customs duties and all. Then it will comes into the GST scope. Until then it is under which scope? Customs scope only. Under customs scope now, then it is what? It is not leviable. See, supply of goods warehoused where? In a SEZ or free trade warehousing zone to any person before clearance for exports to DTA. DTA means what? Domestic tariff area. Until they comes into DTA, they were still under the scope of what? Customs coverage only. So it won't be treated as what? Supply. Okay, na sir. Then the last one, sir. State governments, when they issue any license, actually it is a supply. But when they issue license to sell alcohol, then it is not a supply. Only alcohol license alone is not a supply. Sir, why? Because na, the state governments want all the revenue from alcohol to them only. They don't want to give the share to central government. Okay, that's why first alcohol is outside the scope of GST. So but that time when initially GST is framed, they only remembered about alcohol products. They forgot about alcohol license. Later they remembered about, no, alcohol license is also alcohol related only. In that central is taking share. They want that share also to be only with the states only. Then again, they kept a point with the council. Then council again approved this. So state governments, when they are issuing any license to sell alcohol, that license is out of the scope of supply, covered under the negative list. So total, sir, if you see how many transactions are there, 13 are there. So okay, first 6 what? Funeral, burial, land and building, actionable claims, MPs, MLAs, employee to employer, court services. Okay, then 6 done. Then another 7 are there. Insurance related 2 are there. Co-insurance premium distributed by lead insurer to the co-insurers, not a supply, provided the lead insurer already paid GST. Okay, then what? Reinsurance premium, not a supply. So insurance related 2 done. How many happens, sir? 8. Then what? Alcohol license related. State government giving license to normal alcohol liquor license and all, not a supply. 9 points done. Then, sir, this Customs Act related 3 points are there. One is high seas sale. Before the goods reach India, in the midway only the goods are supplied. Then it is not a supply. 10 points done. Then this warehousing related 2 points are there. Okay, one is like bond to bond transfer. The other one is like the warehousing is made in a SEZ area or free trade warehousing zone. Before they are removed for export to DTA only. In between that, okay, before they were removed for export to DTA, in between if any sales are happened, that won't be treated as supply. 12 done. Third one, supplier in taxable territory. But the goods are from non-taxable territory to another non-taxable territory, then it is what? Not a supply. So total 13 transactions are there, which are called as what? Negative list. So with this we completed total section 7. So how do we discuss our first one? 7 subsection 1. It has clause A, clause AA, clause B, clause C. All these cumulatively helped us in deciding whether a transaction is supply or not. Then 7.1a helps us in deciding supply of good or supply of service. Then 7 subsection 2 helps us, said like a list of transactions which need not to be treated as neither supply of good nor supply of services. Then, okay, so 10 minutes, sir. I'll discuss composite supply and mixed supply, then I'll give break for composite supply and mixed supply. Sir, composite supply, mixed supply, sir. Last attempt it was not asked. So okay, so there are like high chances. The previous attempt it was asked about E-invoice. So last 2 attempts if you see, E-invoice asked in the June 2025 attempt. December 2025 attempt they asked like schedule 1 and schedule 3 related. So this attempt there are fair chances of asking either from composite supply, mixed supply or from E-invoice. Okay. Composite supply means what? Sir, again, composite supply, mixed supply, everybody think like, by looking at the question, easy question only asked. But look at that, if I look at their certified copies, most of them will get like 3 marks or 2.5 marks only for a 7 marks question. What the mistake they are doing? You write 1 point explanation and put examples for that. So nobody want your examples there. They are expecting this is a descriptive question. They're gonna compare with the answer, the key which is given only. So how many points are got correct? As it is matching, that many marks only you gonna get. It's okay. So if it is a pure descriptive question, there is always risk involved. So these kind of questions you need to revise multiple number of times. So then only keywords should be there. They'll check for keywords. So composite supply means what? It's a supply made by a taxable person of goods, services or both, which are naturally bundled. Sir, what? Supplied by taxable person. Which are naturally bundled and supplied in conjunction with each other in the ordinary course of business. Supply made by a taxable person, which are naturally bundled and conjunction. As a group they have been supplied in the ordinary course of business only. It's not like a special transaction. In the regular course of business only, they are supplying like naturally bundled conjunction with each other. And out of the bundle, one of them is a principal supply. So what are those important points here? Supply made by a taxable person. Naturally bundled conjunction with each other. In the ordinary course of business, one of them is a principal supply. What is called principal supply? Out of the bundle, whichever is having predominant nature, that's called principal supply. Then mixed supply. What is mixed supply? 2 or more individual supplies of goods, services or both made in conjunction with each other by a taxable person for a single price, and it is not a composite supply for a single price. 2 or more individual supplies of goods, services or both made in conjunction with each other by a taxable person for a single price, and it is not a composite supply. Okay, here individual supplies are independent and not naturally bundled. So, okay, what is the difference, sir? Here also taxable person only, made in conjunction only, but single price, and it is not a composite supply. Then the fourth point, much more key. What? They are saying like individual supplies are independent and not naturally bundled. So they are naturally bundled, here not naturally bundled. There they are like dependent on each other. Here each and every supply is like what? Independent. Okay. So how do we test naturally bundled or not? So there is no one formula to decide naturally bundled or not, but these are certain indicators to decide whether they are naturally bundled or not. What are those? Perception of customer. Majority of suppliers provide such bundle. Sir, perception of customer. Sir, when you buy an AC, you'll expect remote or not? Or else you'll go and like press the buttons and you'll operate AC. So long back, some 20 years back now, they might have expected that. So, the childhood TVs and also black and white TV, the color TVs and all, there might not be remotes. That time people expected like what? They didn't even expected remote. But these days when you buy a TV, you'll expect not only remote, you'll expect even installation also. Okay, so all this is what? Perception of customer. And majority also do the same. Then single price. Are they collecting separate price, sir? For remote separate price, TV separate price, installation separate price? No, right? Single price. How they are advertised? They are advertised as a bundle only. Elements are not available separately. It's okay. When they are not available separately, then also they are treated as what? Composite supply. Elements are integral. Integral now, one will not work without the other. It's okay. A computer, sir, or a laptop, without the OS, the laptop will not work. So OS, I mean the Microsoft, sir, it may be HP laptop or a Lenovo laptop, but the OS is owned by Microsoft. So Microsoft OS and the laptop hardware, both are what? Integrated. One will not work without the other. So those two are what? Integrated. Then elements are not available separately. So those individual parts are not available separately. Then they are called as what? Naturally bundle. How do we tax? If it is a composite supply, na, out of the total bundle, whichever is the principal supply, the rate apply on principal supply has to be levied on the total bundle. If it is a mixed supply, treat as the supply that attracts highest tax rate. Whichever has the highest tax rate, that rate has to be applied on the total bundle. Okay, certain examples, sir. Train tickets, Rajdhani train tickets, Rajdhani train. So, okay, what happens in Rajdhani? Along with the along with the ticket, I mean transportation, meal will be included. You cannot exclude it. Okay, meal is by default included. You have only two options to select veg, non-veg only is there. You cannot deselect the meal there. So that's why meal with the transport items are not available separately. So what? Composite supply. Laptop and a bank. Majority, sir, I'm not talking about online, offline sales. Still majority vendors, sellers, when they sell laptop, they are providing laptop bag also. Then it is what? Composite supply. Mobile and charger. It's okay. Of course, majority mobiles are discontinuing now, but still, okay, the perception of the customer is what? To give even a charger. Still majority suppliers are doing, so it is what? Composite supply. Okay, then if any electronics you buy, electronics delivery and installation, okay, what? Composite supply. Goods sold, delivery is there, insurance is there, then also what? Composite supply. Then movie tickets plus popcorn. Sir, popcorn optional, mandatory, you need to check. Let's say they are selling it like a combo ticket for a special show. You can buy the ticket only if you, I mean, it's like a combo ticket, sir, where movie ticket, popcorn, cool drink, all together they are selling. It's not available separately. Then you have to take it as what? Composite supply. When they are available separately, then it becomes what? Mixed supply. Then construction contract involves good and service, still composite supply, which is predominant service. Hotel stay, accommodation, okay. In 5-star hotels and all, sir, they may provide stay. Breakfast also complimentary, free breakfast will be there, and some places lunch also will be there, complimentary. And then laundry. Then what? Hotel stay, breakfast, laundry, all this together what? Composite supply. Okay. Then treatment to patient. Okay, treatment to patient along with that food diet provided. That also what? Composite supply. Then finance lease. Lease is there, and even finance interest part is also there. That also has to be treated as what? Composite supply. Then mixed supply examples. Diwali gift hamper. It's a gift hamper which consists of different dry fruits, chocolates, sweets, all these. All these are like different items packed as one thing, na? So that is what? Mixed supply. A pack of shirt, wallet, watch, book, mixed supply. Free bucket with detergent, mixed supply. A kit by a fancy store like hair oil, comb, soap, all this, mixed supply. Extended storage device and UPS. Sir, this is an exam question, sir. It was asked in June 2024. Okay, everybody, most of the students wrote it like what? Composite supply. Sir, usually what happens when you buy an inverter? How inverter will be there? There will be UPS machine, like which takes power supply, uninterrupted power supply, it will do. And there is a extended battery, external battery also connected to it. What we think usually, both are like integral only, we'll think as composite supply. But it went to advanced ruling. So what is called advanced ruling means, sir, if you take an opinion and later the department takes it in a different view, and ultimately you paying what? Tax, interest, okay, penalties, all this you need to pay. So before itself, if you have some doubt regarding whether it is a supply or not, what is the value of supply, what is the tax rate, if you have any doubt. Instead of you yourself deciding something, okay, you can go to whom? Advanced ruling. There authorities will be there, like commissioner and all will be there. So those level officers will be there. So they will analyze the issue and tell a particular ruling. Okay. So this matter also went to advanced ruling. If anything is not favorable to you in advanced ruling, you can even go for appellate authority for advanced ruling also. So this matter even went to appellate authority for advanced ruling also. There what they said means, this battery has multiple uses. Yes or no? Yes. But this battery is not integrated with it. It was externally connected. Sir, our mobile also has battery. But where can we use that battery for any other purpose? Can we remove it on our own without damaging and all? Yes, a mechanic can remove, the technician, but we cannot remove easily, right? But thus UPS, that inverter related battery, we can see externally connected. Just by removing two plugs, you can take and use it to your car also. Okay, so that has multiple usages. It was not restricted only for that one. That's why it is treated as what? Mixed supply. Okay, sir? So, okay, then toothpaste and toothbrush. So, okay, you think like both are connected only, sir, related only, na? Okay, simple logic, sir. In a house, how many toothpaste? One only. Brushes? Multiple brushes only, na? So that's why what? Both are like not independent of each other. So that's why what it is? Mixed supply. Okay, na, sir? So, okay. Now we'll take a break, sir. 15 minutes we'll take. We'll start again at 7:30. So, okay. So, sir, supply chapter, whatever the content needed, we have discussed. We'll go through the questions and immediately we'll go to the e-way bill and e-invoice part. So, okay, some 30-35 minutes we'll complete that. Then we'll go into the returns chapter. Okay. Hello. So then I'll take it to the workbook and we'll discuss the important questions from here. So in workbook we have discussed question number 1. Then question number 3, if you see, what is this, sir? This one, sir. Explain the concept of supply made in the course or furtherance of business as a taxable event under GST law. See, so this was not discussed in the theory, but see, what is called course or furtherance of business? Because many times you use what is like in the course of business and the furtherance of business. Course of business, like in the day-to-day business activities, like every person carries out certain activities regularly for running trade or commerce. It's called what? In the course of business. Then furtherance of business, what? Every business person used to think how to develop his business or carrying out new activities. I mean, expanding the business will comes under what? Furtherance. Running the day-to-day business will comes under what? In the course of business. Sir, all this part is like something like just to fill lines they wrote, but in the course or furtherance now only this part is relevant. Okay, course of business means what? Carrying out certain activities regularly for running trade or commerce. Okay, furtherance of business now, like to develop his business, carrying out new activities. Such activities is called as what? Furtherance of business. Then question number 4, sir. What is question number 4? You can tell that easily only. What is the difference in tax consequence between intrastate from head office to branch in same state and interstate stock transfers from head office to branch in different state of the same supplier, which is a private limited company? What kind of GST will be levied? Sir, they given 2 transactions are what? One is like head office, branch office, both are in same state. Okay, then what? Okay, then head office to branch office stock transferred, but both are in 2 different states. Sir, understand, when they are in different states, not definitely mandatory they should go for separate registration. Then both these are called as what? Distinct persons. Between distinct persons, when there is any stock transfer, even though there is no consideration, it amounts to what? Supply. But when they are in the same state, okay, question is not clear about whether they are registered separately or not. Okay, if at all they are registered separately, then they also called as what? Distinct persons. Again, it would be treated as supply, otherwise not a supply. Okay, then question number 5, sir. What is this one? Tata Consultancy Services versus State of AP. What? Sir, Tata Consultancy Services, in this particular case law, Supreme Court decided like what? Goods may be tangible property or even intangibles. It would become goods provided if it has following attributes. If anything has the following attributes, then it can be called as what? Good. I mean, even an intangible also can be called as good if it has following attributes. What? Utility. It can be used. Okay. Capable of being bought and sold. Capable of being transmitted, transferred, delivered, stored, and posted. Nothing but, sir, these days, how can we sell a software, sir? If it is loaded into a CD, hard disk, pen drive, then only we can sold. I mean, once it is kept into a media, only you can sold. Okay, then only you can make it like transferable, deliverable, stored, post. Okay, so if any of these attributes are available, then even though it is an intangible, we call it as what? Good. But goodwill, sir, goodwill, you cannot use it. Okay, it may be bought and sold, but goodwill can't be transferred. My goodwill can't be transferred to someone else, or else it can't be there, or it can't be delivered, or it can't be stored. So intangible, if these these attributes are there, then it will come under what? Okay, good definition only. Okay, then what else we gonna discuss? Then this one, sir. Question number 9. Question number 9. What is this? Whether GST is applicable on services or assistance rendered by the court receiver appointed by the court. What was said here, sir? See, if you remember Schedule 3, judicial services are what? covered under Schedule 3. Judicial transactions are, hi Niranjan, so where you have to get these questions and all na, you need to buy books. Whether GST is applicable on services or assistance rendered by the court receiver appointed by the court. So judiciary services are what? Covered by Schedule 3. So judiciary services are what? Negative list. Okay. But here not judiciary services. What happened here, sir? Court receiver is appointed by the court. So now first you need to understand who is court receiver. Sir, let's say High Court given an order. But someone has to implement that order, right? Who will, court just gives a decision, na, it's not enough. The decision has to be implemented by someone. So High Court order implemented by court receiver. Okay. So now court receiver will come to the ground reality. He'll come to the actual place and try to make sure that the court decision has been implemented in the ground level also. For that, the normal, like the petitioner has to pay a fees even to the petitioner has to pay a fees even to the court receiver. So to the court receiver, if any fees is paid, and for that court receiver is providing services, the question is, what is the taxability of the services provided by court receiver? See, court receiver providing services to a person. What service? Implementing the court order. Is it a supply or not? Is the question. What is the question said, sir? The answer says like, these court receivers has to be treated as like extended officers of court. Those court receivers has to be treated as like extended officers of the, see, office of the court receiver is an establishment of the High Court through which the orders issued by High Court are given effect to. Hence, these are also like a branch or establishment of court only. So these services are also covered under negative list. Okay. Then explain the provisions related to composite supply and mixed supply. Composite supply is what? Concept of bundle service under service tax law. Okay. What here they explain, sir. Composite supply means supply consists of two or more goods services which is naturally supplied with each other in the ordinary course of business, and one of them is a principal supply. The items cannot be supplied separately. Okay. So then following two conditions are necessary. What? Supply of two or more goods and services, and it should be naturally bundled. Mixed supply. What? Two or more individual supplies, combination of goods and services with each other for a single price. Each of these items can be supplied separately, is not dependent on each other. In other words, the combination of goods and services are not bundled due to natural necessities, and they can be supplied individually in the ordinary course of business. Then another question also related to composite and mixed supply only. Then, so this one, sir, state with reasons whether the following supplies are composite or mixed supply, where goods are packed and transferred with insurance. Packaging is made, goods sold, packed, transported, and even insurance is there. So all this is like a naturally bundle only. When goods are packed and transported, the supply of goods, packing, materials, transport, and insurance is a composite supply. Why? It consists of two or more supplies naturally bundled and supplied in together in the ordinary course of business. So it comes under what? Composite supply. Then Neeraj booked a Rajdhani train ticket which includes meal. We already discussed, sir. What? Composite supply. Then this also I said, supply of external storage device, battery with UPS. Already said, sir. Why? Battery is separable and it has multiple usages. That usage of the battery is not restricted. That's why it is what? Mixed supply. Then question number 16, sir. In the following cases, based on the information given and the query, give your comments on the taxability. First one, Space Bazaar offers a free bucket with a detergent. Mixed supply, sir. Why? Because yes, they may have some connection, but will not use bucket only for washing clothes only, right? That's why it is what? Mixed supply. Then A booked a Rajdhani train ticket which includes meal, composite supply. Ravi, being a dealer in laptop, sold laptop bag along with laptop, composite supply. Sir, then this one is from exemption, sir. What is this point? Renting of vacant land for a stud farm. Stud farm na for growing horses. Cattle farm na cattle. Stud farm means horses will be there. For growing cattle and all. Dairy farm, if land is given on rent, exempted. For stud farm na taxable. Then a contract was awarded to Kolkata Municipal Corporation for repair of a particular road. Sir, understand this one. It's okay for that particular point only, this point only. I have given clearly explanation, sir. Sir, all the other students also, even if you took regular classes or fast track also, be clear here. What is happening here, sir? Here, supplier is providing a service of repairing the road to Kolkata Municipal Corporation. Okay. Then Kolkata Municipal, look at the point. A contract was awarded by Kolkata Municipal Corporation for repair of a particular road. Okay. And the condition says like what, it has to be completed within 30 days. However, there is a delay of what? 10 days. So since there is a delay, Kolkata Municipal Corporation asked them to pay liquidated damages of 1,20,000 and the same was recovered from B Limited. So, okay. Now whether that amounts to supply or not. See, what is the point here, sir? It is a supply of service. Okay. B Limited being a recipient of service is liable to pay GST on rupees 1,20,000 since the contractor has performed the contract, but there is a delay of 10 days. Sir, here understand. Who is providing service to whom? First, B Limited providing a service to whom? Okay. Then, for this damages, sir, KMC is providing service. Why? Sir, they are tolerating the damage. Actually, the service has to be completed within how many days? 30 days. But they took beyond 30 days. For tolerating that delay, okay, what is happening? B Limited is paying them 1,20,000 as liquidated damages. So who is the supplier, sir? KMC, Kolkata Municipal Corporation is the supplier. What supply they did? They tolerating the delay is the supply they made. Okay, for the tolerating the delay, how much they are getting? 1,20,000. So okay, sir, here in the answer, if you see, what? In the ordinary course, it is the supply of service. However, which one, sir? It is like this one only, right? Okay, non-performance of a contract by the supplier in case of supplies to government, local authority is covered under exemption. Sir, actually, where local authority, look at this exemption, where any fine or penalty chargeable by government or local authority is imposed for violation of any statute, bylaws, rules, regulations or any contract are exempted. So any damages collected by government including local authority are exempted. So what? First, when municipal corporation collects this 1,20,000, it is a supply. Okay, then it is what? Exempted. Then it is again exempted. Sir, why? Because it is clearly mentioned like what? If there is a delay in 10 days, then damages has to be paid. First, there is a clarification, sir, where they says like for this liquidated damages and all, to call it as a supply or not, there should be a contract first. There should be an implied contract or explicitly written contract. Either implied or explicit contract should be there that to pay liquidated damages. Let's say, sir, for example, like a lorry suddenly, sir, there was a tea stall on the roadside. Now a lorry come and hit the tea stall. Now the tea stall was severely damaged, so the lorry owner or that person has paid some 30,000 damages to the tea stall. Is there any contract for to get the damages? Since already some damage happened, they paid as a compensation kind of. There is no written agreement under. So that liquidated damages is not a supply. But here there is a contract clearly. By reading the question, we understood like what? It has to be completed within 30 days. Beyond that, if there is any delay, they have to pay damages also. So here there is a contract is there. Since a contract is there, this liquidated damages amounts to supply. So it is a supply of service. But since the one who is tolerating is government even has an exemption also. So it is what? Exempted. Okay. So these are the points, sir. We already discussed all this one also. Then next one. Kala is a registered supplier of Jaipur, made the following supplies in the month. Most of them are like easy points only, sir. Supply of laptop bag along with laptop to a customer of Mumbai. How much, sir? 55,000. Laptop and laptop bag. What? Composite supply. Then supply of 10,000 kits amounting to 5 lakhs. How many, sir? Sir, from here only, sir. Question, be clear, sir, and attend to. We cannot take much time. 10,000 kits. Okay, amounting to how much, sir? 5 lakhs. To Ram Fancy Store in Kota. Each kit consists of 1 hair oil, 1 beauty soap, 1 hair comb. What? Mixed supply. This is also clear. Then next one, sir. 100 kits are given as free gift to Jaipur on the occasion of her birthday. Each kit consists of oil, soap and all. Okay, cost of each kit 35. But the open market value of like kind and quality is not available. ITC has not been taken on the goods contained in the kit. So tell whether it is a supply or not. No, sir. Why? There is no consideration. Here what? They given it as a free gift. Free gift means what? No consideration. If there is no consideration, to call it as supply, it should satisfy Schedule 1. Principal and agent, not there. Import, not there. Third one, between related and distinct persons, not there because they are like normal customers only. Fourth one, permanent transfer or disposal of business assets on which ITC availed. Here they said like what? ITC not availed. Hence it is not a supply. Then event, next one sir, see. Event management services provided free of cost. To whom? To her brother for his son's marriage. Okay, free of cost event management services provided. Cost of such service is 80,000, but the open market value is not available. Now tells her fourth point, is it a supply or not? What service she provided? Event management services. To whom? Related person or unrelated person? Related person only. Yeah? So check and once again and tell clearly. Brother also, if he is dependent related. Sir, brother's son marriage is also happening. So how he is dependent? He is independent only. So he is not into the definition of family. So they are not what? Related persons. Since they are not related persons, the transaction between them is not a supply even though there is no consideration. So usually no consideration also it is what? Supply. But since they are not related persons, it is not a supply. So this is also not a supply. This is also not a supply. Then what else happened? Sir, see, they are supplying 1400 chairs and 100 coolers hide out at what? Function garden. Ajmer for how much? 3,30,000. Including cost of transporting the chairs and coolers from Mrs. Kala go down to Jaipur to the function garden. Okay. So what? They are supplying chairs to coolers. Okay. So for how much sir? 3,30,000. Is it a supply or not? It is a supply. No problem with it. But extra, this point sir, from here important. Kala has paid the cost of transportation of chairs and coolers to an unregistered GTA at what? 20 rupees for each chair and each cooler, and in turn, sir, for taking 20 rupees and in turn charged rupees 20 for each chair and each cooler. So for taking also and coming back also. Okay, how many items? 1500. 1500 into 20 now how much sir? 30,000 is the GTA charges. And here also 1500 into 20 na 30,000. But actually sir, in the previous answer, here it was taken as only 30,000. But the question on reading it clearly sir, it mentioned both to and fro. That's why I took 60,000. If you look at any other like institute sources now, here there will be only 30,000. Okay, by they considered only one thing. But actually it is like both to and fro. That's why I took what? 60,000. Sir, why it has to be taken na? Understand? Sir, she actually what service she is providing? She is renting these chairs and coolers. But to transport that, she want a vehicle. So he is taking GTA service. Sir, for GTA service, why we are calculating? Because GTA service is taxable under RCM. Okay, that's why she only has to pay the tax. So how much, sir? Okay, 1500, sir. Here the totals has to be corrected, sir. The totals are wrong. 92,000 and 92,000. The totals are like 92,000 and 92,000. So this question number 22, what happens here is, this one sir. See, there is Columbia Hospitals. Okay, this hospital has a corporate office. This corporate office has appointed an employee called A. So he is employee of whom? Corporate office. Now this employee is providing services to branches. Branch 1, branch 2, branch 3. Okay, now the question is, when an employee of corporate office providing services to branches, is it covered under negative list? Are you able to understand, sir? What is covered in negative list? Employee providing services to employer. But he is an employee of corporate office, not of branches. Branches will have separate registrations. They will be treated as distinct persons. So he is employee of whom? Corporate office. So when he provides service to corporate office, negative list. But he is providing service to whom? Branches. So they are not covered under negative list. And the main thing to understand is like when he provides service, he is not providing in his capacity. He is representing corporate office and providing services to branches. So even though service provided by employee, it has to be counted as like who provided service. Corporate office providing services to branches. Okay, what? Then service between distinct persons. Even though there is no consideration, it amounts to supply. Okay, that was what explained here in the advanced ruling of Columbia Hospitals Private Limited. Okay, that's also, these are the, this is the last attempt question, sir. Last attempt, what they asked to write down like about schedule 3 and schedule 1 they asked, sir. Okay, that one only mentioned here, schedule 1 and schedule 3. Okay, with this we completed like what, first supply chapter, sir. Then let me go into e-way bill concept also. Sir, e-way bill. E-way bill is like a proof for movement of goods. E-way bill is not a proof of supply. E-way bill is a evidence for movement of goods. E-way bill is an evidence of movement of goods. Okay. Sir, understand, 500 lakhs goods are there. Actually, he sold all the 500 lakhs worth goods. 150 lakhs sales he accounted. I mean, recorded in the books as sales. Other 350 lakhs he sold, but didn't account it. So now as per records, what happens? This 350 lakhs will be showing as like closing stock. Okay. But when the GST team comes for actual inspection, will he found the, I mean, will there be closing stock? No, there won't be any closing stock. But this person is saying like what? Sir, yesterday only I sent to my brother's place, sister's place, or to my warehouse, some 100 kilometers away, 50 kilometers away, all this story he is telling. Okay. Now, obviously GST officers has to believe that. Then the next day or after 2 days, if they go to that particular place, now by that time what he'll do? He'll arrange some more stock there and he'll be escaped from the penalties, guilty and all, he'll be escaping. To control that, what they are saying, they'll immediately ask, okay, you are saying like the goods are in the warehouse or some other place, right? Is there e-way bill? So what is e-way bill? Whenever you move goods, you should have raised an e-way bill. Okay? If there is no e-way bill, then they'll not. Okay, when there is no e-way bill, then what? They'll not believe that even if you say like the goods are moved from one place to another place. So e-way bill acts as an evidence for movement of goods. Okay, what are the advantages of e-way bill, sir? It is a physical interface. It gives a physical interface to waive wafer. Sir, originally e-way bill is planned like how means? The government thought like just like as fast tag. We know fast tag, right, for tolls and all. Same way for e-way bill also, they thought of bringing some device kind of, which will be fixed to all these conveyances. Okay. Now at the state borders, they'll put some toll gates kind of. Once these vehicles pass through that particular state borders and all, immediately that gets readed by the scanners or the devices they keep. Okay. So immediately they came to know like which goods are moving, how much value and all. So they get verified automatically. So, okay, that was the original plan. But logistics people said like our transporters, I mean our truck drivers and all are uneducated people. If these devices and all will not work properly, these people has to face all the problems, because midnight sometime the problem will comes. When they call supplier or to the recipient, nobody will respond. So unnecessarily the truck guy has to face all the problems. So that's why logistics people said like this is not acceptable to us or not convincing to us. So they came back to the old model only, like they'll generate an e-way bill on the website and a paper form will be carried by the logistics guys. Okay. But these advantages are given considering that device only. Okay. So if that device is installed, what are the advantages, sir? There won't be any physical interface. Automatically at the state borders, the vehicle will get checked automatically. Okay. So physical interface has been kept aside for giving what? Digital interface. Sir, pave way na physical interface will go aside, and which comes into main line, digital interface will come into main line, which results in elimination of state boundary checkposts. So okay, this is like theory. Practically what is happening? Physical checkposts are only there still because that device is not installed to the trucks and all. Okay. Because of elimination of state boundary checkposts, what happens, sir? Goods will move much more faster. Turnaround time, I mean the trip times and all will be much more quicker. So it will improve turnaround time of logistics industry and reduces cost and travel time. Okay. So then section 68. Okay. What does section 68 says? Like, person in charge of a conveyance has to carry certain documents with him mandatorily. One among those documents is mentioned as e-way bill under section 138. Person in charge of a conveyance carrying goods of value exceeding specified value shall carry documents prescribed. Okay, one among such document prescribed is what? E-way bill. Now applicability. When e-way bill has to be generated? E-way bill has to be generated electronically when prior to commencement of movement of goods in which form? EWB01. Electronically prior to commencement of movement EWB01. And the value of goods is like more than 50,000. Sir, understand? Consignment value. They are not saying good value. Consignment value. That means value of supply is 45,000. On that GST 8,100. Total how much? 53,100. So consignment value now we need to check including GST value. If including GST value the price is more than 50,000, then e-way bill has to be generated. Not excluding GST, sir. Here in this example, if you see, excluding GST, it is within 50. But including GST, it is more than 50. That's why here including GST, we need to check e-way bill has to be generated. And it is irrespective of supply or not. It may be a supply or not a supply. But since goods are moving, e-way bill has to be generated. Okay. Who has to generate? Whoever causes the movement of goods. If supplier is moving goods, supplier. Recipient moves, recipient. But practically always supplier only will generate e-way bill. Theoretically, for theory purpose, whoever causes movement. Supplier causes na supplier, recipient causes na recipient. If supplier unregistered, recipient. Recipient unregistered, supplier. Okay. Then even supplier and recipient both can delegate the power to generate e-way bill to a transporter also. Situations where e-way bill is to be generated, even the value is within 50,000. When there is an interstate transfer of goods by principal to job worker. Sir, interstate. Between principal to job worker. Value less than 50,000. Still e-way bill. And then interstate transfer of handicraft goods by a person exempted from registration. Still he has to raise e-way bill. Then situations e-way bill is not required. When goods are transported by non-motorized conveyance. Non-motorized conveyance. The movements of goods is within the areas notified. Goods are transported by non-motorized conveyance. Movement of goods is within the areas notified. I mean like within the SEZ areas, within the notified areas. Goods are exempted. If they are petroleum products, goods are covered under Schedule 3. Sir, what are those? Non-motorized conveyance, bullock cart and all. Movement of goods is within the areas notified. Goods are exempt from GST. Petroleum products, goods covered in Schedule 3. Empty cargo containers. Empty cargo containers, now that cargo containers will be there, like the big containers and all, like in ports and all, we'll see those things. Empty LPG gas cylinders. When the goods are transported from Nepal to Bhutan and goods are transported from Weighbridge. Okay, goods are transported to Weighbridge only and the Weighbridge is within 20 kilometers. In these cases, e-way bill is not necessary. So once again, sir, non-motorized conveyance within the notified area, exempted goods, petroleum products, empty gas cylinders, and then empty cargo containers, goods which are covered under Schedule 3. When the goods are transported in cargo from Nepal to, from or to Nepal and Bhutan, then goods movement is caused by Ministry of Defense and goods are transported to Weighbridge within 20 kilometers. Then e-way bill in case of bill to ship to model. What is called bill to ship to model, sir? Understand? Here, there are three people are there, like Pravalika, okay, Mac, Shivani, three people are there. Okay, now what happened here? Sir, originally this Pravalika wants goods. So she approached what? She approached Y, Mehak, who is in Bangalore. Okay, recipient R want goods. So he approached Y in Bangalore. Okay, Then Y in Bangalore also has no goods, so she ordered from again S from Odisha. Okay, sir, you want goods. Okay, X want goods, so X approached whom? Y. Y also doesn't have goods. Now Y again ordered with whom? Z. Now Z actually has to send goods to whom? Y, and Y again has to send it to X. But here what happens? So here also same thing, sir. R ordered with Y, so what? Y also has to send it to, Y ordered with S. Now how the billing will be done? S to Y, Y to R. But understand, sir, here ultimately the goods has to reach where? Andhra Pradesh. From Odisha sending to Bangalore, again sending back to Andhra Pradesh. All this is what? Double transportation cost and all. To avoid that, what happens, sir? Y asked the supplier to send directly to the R, who is in Andhra Pradesh. So this is called what? Bill to ship to model. Why? See, look at from this Shivani perspective. She invoiced to Y. Billing made to one person, whereas shipment made to another person. So bill to one person, ship to another person. That's why it is called as what? Bill to ship to model. Here there are two supplies involved. One is between these two, one supply, and between these two, another supply. Two supplies involved. The question is, how many e-way bills are needed? How many e-way bills are needed? Sir, e-way bill is linked to supply or movement? Movement. How many movements are there? One movement is only there, so one e-way bill is enough. So it is not linked to invoices, it is linked to movement. Okay, two supplies involved. Even though there are two supplies, one e-way bill is enough. So then information in e-way bill. E-way bill has two parts, part A, part B. Part A consists of goods details like what? Value, HSN code, consignor, consignee, GSTN number of supplier, recipient, why it is being transported, date. All these details will be there in the part A. Usually all these details will be there in the invoice. Then part B consists of transporter details like vehicle number, owner name, that LR, lorry receipt and all those numbers and all, which will be furnished by the transporter. Okay. However, on authorization, both this will be filled by whom? Transporter only. Both can be filled by transporter only. Okay. Where the goods are supplied through eco or sent through courier, then both parts will be filled by them only. Then details not required to be filled in e-way bill in some cases. Sir, part B. Sir, usually what we said, transporter details has to be filled in part B, right? But sometimes it need not to be filled. It's okay. Sir, you need to understand some technical terms, sir. Place of business means what? The place from where they carry out business. For railways, what are their place of business? For railways, what are their place of businesses? Sir, where you will buy tickets? Okay, if there is no online, see, that's their place of business, right? Place of business means what? From where they do business is called their place of business. From where railways are doing business, traditionally from railway stations only. So that every railway station is their place of business. So now, let's say you are in your factory is located here. And your nearest railway station is this one. Okay. Sir, your factory will be adjacent to railway station. Huh? Somewhat like some 20 kilometers, 30 kilometers away from railway station only, right? So now you want to transport your goods from Hyderabad to Mumbai via goods train. So now first you need to take your goods to where? Railway station. How you will take them? Some truck, something has to be used, right? Now how many vehicles are being used? Truck, then train, then from again railway station to the ultimate customer place. Okay, again one more truck. So how many are involved? 2 trucks, 1 train. 3 are involved. So now part B, actually all these 3 details has to be included, right? But what the relaxation says means, when from factory to railway station, if the distance is within 50 kilometers, then the truck details you need not to fill. Just fill the train details. Same way from the railway station to the ultimate destination also within 50 kilometers, then also the details are not filled. But in provision, they didn't mention railway station, airport and all. They mentioned it as like place of business of transporter. Okay, place of business of transporter. For railways, what is the railways transporter, right? What is their place of business? Railway station. Okay, so from supplier place to place of business of transporter. And then place of business of transporter to recipient place. When those distances are within 50 kilometers, then that particular conveyance which is used to transport from supplier place to transporter place to recipient place, that truck details we need not to fill in the part B. Then when good, that also same logic. It's okay, within the country now. Where goods are transported from one conveyance to another. Sir, actually from Hyderabad you need to send goods to Assam. Okay, but directly no vehicle or no logistics guy is ready to take the goods from Hyderabad to Assam. So what? You sent to Kolkata, and from Kolkata another truck is there. Now what? How many trucks are involved? So 2 trucks. Now in part B, which truck details has to be filled? Or 2 e-wables needed? 1 e-wable is enough. But before the goods are unloaded and again the other goods are loaded, part B has to be updated. Part B has to be updated. Consolidated e-wable. What is consolidated e-wable? Sir, let's say in a train, how many goods? Multiple people goods will be loaded. Let's say there will be some 1,000 people related goods might be loaded into the train. Now, this people, if they want to carry all those e-wables, 1,000 copies, they need to take printout, then they have to go for a spiral bind because they have to carry all those, right? Will that happen? Is it possible, sir? In that 1,000 copies, if he has to verify or find out something, it will be so tough for him. That's why to make it simple, they introduced a consolidated e-wable concept also. Sir, individually, first you generate e-wable. Then for the transporter, to carry them easily, a consolidated e-wable also has been introduced. What does it contain? All these individual e-wables, just their serial numbers will be there in the consolidated e-wable. And this consolidated e-wable will be there in the EWB02 format. When multiple consignments are transported in a single conveyance, consolidated e-wable is generated. It consists of e-wable numbers generated in respect of each consignment. It is just like a trip sheet. It contains details of different e-wables. Okay, it does not have an individual validity. Then cancellation of e-wable. If you want to cancel the e-wable, it has to be cancelled within 24 hours from generation or before verification. Then validity of a e-wable. Sir, once you generate an e-wable, it has some time validity, time period validity. Okay, it depends on which kind of vehicle you are using and how much distance you are going to travel. If it is normal conveyance, okay, normal conveyance, not an over-dimensional conveyance, normal conveyance. For every 200 kilometers, 1 day. Or a multiple, once 200 kilometers increases, then 1 more day adds. Once it exceeds 400, then 1 more day adds. Okay, so in simple, to find out validity, take the total number, total distance, divided it by 200. If it is in fractions, take the next whole number. 4.1, take 5 days. 5.1, take how many days, sir? 6 days. That's the validity. Okay, so distance, simple, sir, 830 kilometers. What we have to do? 830 by 200, 4.15 days. But you will take it as like what? 5 days. Over dimensional cargo, 20. For every 20 kilometers, like 1 day. So then how do you calculate? Take the total number of total distance divided by 20. Take the next whole number. But this one calculates by system only, sir, by default. When you are generating e-wable, how system calculates means it will take the origin pin code and the destination pin code. So it only will calculate the distance, and based on that it will generate the validity also. You need not to calculate and put the validity there. Okay. So on application, the commissioner, sir, again, while counting the validity, you should not count the date of generation. So let's say on 16th May morning 6 o'clock e-wable has been generated. Okay, so 16th May you ignore. If validity is like 2 days, it's not like 16th May 7 a.m. to 18th May 7 a.m. It's like what? The date of generation you ignore. 2 days means what? 17th and 18th. Okay, till 11:59 p.m. of 18th, it is valid. Understanding, sir? If it is like 5 days, again leave 16th and count 5 days. So ignore the date of generation and count the validity number. 3 days, add 3 days. 4 days, add 4 days. But date of generation you have to ignore. Then if at all e-wable has to be extended, it can be extended within 8 hours from expiry of validity. E-wable validity also can be extended. Then restriction on furnishing of e-wable. Sir, some cases, okay, you will be restrained from generating an e-wable. Why? Sir, you are not following certain compliances. Maybe you are not filing returns. Okay, then to restrict you or to pressurize you to do those compliances and all, they are restricting your e-way bill generation facility. Okay, when, sir, that also with respect to your outward supplies only. Sir, e-way bill can be generated by supplier as well as by recipient. If you, as a recipient you are generating e-way bill, no problem. But as a supplier, if you are generating e-way bill, then it could be restricted in this following cases. When you are a composition taxable person and you didn't file the statement of tax payment consecutively for 2 quarters. You are a regular person, not filed GSTR 3B consecutively for 2 tax periods, or not filed GSTR 1 consecutively for 2 tax periods. Then your e-way bill generation facility can be restricted. That also regarding your outward supplies. Then what? You immediately can make an application to the concerned GST officer. Then on showing sufficient cause, if he is satisfied, like, okay, because of a sufficient reason you didn't file the returns and all, so then he may again allow you to generate the e-way bill and all. Okay, e-way bill generated by supplier has to be accepted by recipient. Generated by recipient has to be accepted by supplier. If it is generated by transporter, then both supplier and recipient has to accept. Within what time? Within 72 hours from raising e-way bill or date of delivery, whichever is earlier. If not accepted also, it is deemed to be accepted. Okay, if not accepted within this time, then it is considered as what? Accepted only. If you want to reject, then go on specifically reject that. If no rejection, it is like accepting only. Then inspection and verification of e-way bill. So every e-way bill may be verified, sir. During the transit, the GST officers may stop a vehicle and can verify the e-way bill. Immediately they'll fill part A. Once they verify a truck and all, they'll immediately update part A. Record online within 24 hours of inspection. Part B consists of detailed report. What actually mentioned in e-way bill, what they are carrying, what are the differences, the value is how much, tax is how much, all the detailed thing. Sir, detailed report will not come for every truck. Why? Because if everything is correct, then just part A is enough, because there are no differences on all. Part B, they'll just simply update part A and go. Part B, when there are differences, okay, in e-way bill you mentioned as 2 lakhs goods only, but actually in the truck there are 10 lakhs worth goods. So 8 lakhs you didn't shown in the e-way bill or in the invoices. Then all those details you're going to detailedly fill in the part B. Part B, and part B you're going to file it within how many, part B has to be filed by the GST officers within 3 days. Then commissioner can extend it for another 3 days also. Now we are into the concept of e-invoicing. Okay, that is about what? E-way bill. So what questions can be asked about e-way bills? E-way bill related restriction point is important. When e-way bill can be restricted? When composition taxable person are not filed 2 tax periods consecutively, or normal person didn't file GSTR 3B consecutively 2 tax periods, or GSTR 1 consecutively for 2 tax periods. That one. Validity of e-way bill, and situations where e-way bill is not required. It's okay. So those are like certain important areas. Then e-invoicing. So first of all, what is e-invoicing means? So like normally how billing will be generated, invoice will be generated, same way e-invoice also. But what happens means, so let's say they are using some kind of software. Okay, usually what happens, invoice now, once invoice is prepared, you'll click on the print, you'll get the print, you'll sign it and give it to the customer. Now, before taking it to the print and all, the file will be generated in a specific format called JSON format. Just like as JPG, XML, like PDF, Word, JSON is also a file format. In that format, you will generate. Then you will log into e-invoice portal. There, you will upload this JSON file. Then it immediately processes it and adds a invoice reference number. Okay, for every invoice, it will add a invoice reference number and even adds it like digitally signed. That you will take printout and give it to the customer. So it will not take much time also. Okay, within extra 1 more minute it will take. Okay, but if yours is a completely ERP package, means what happens? There itself directly you will click. Okay, it will connect to the e-invoicing website also. It will only immediately upload that file. You just will be clicking on like yes, those clicks only you will be doing. It gets processed and you'll get a e-invoice. Okay, but normally step by step you need just like as how you generate e-web invoice, same way you'll generate. But it will be converted into which format, sir? JS1 format. That format you will upload into the e-invoice portal. There it processes, it will add the invoice reference number, and then you can download it and give it to the customer. Sir, what is the benefit of it? Sir, when e-invoice is generated, that data will immediately uploads into your GSTR1. Sir, GSTR1 means what? Every supplier has to file GSTR1, which consists of his outward supplies. So once you raise an e-invoice, immediately the data will be there into the GSTR1. GSTR1 gets updated. Once GSTR1 updates, immediately recipients 2A also gets updated. Immediately, sir. Sir, there are two things, 2A, 2B. 2B updates only when GSTR1 is filed. Here GSTR1 is not filed, just GSTR1 is updated. Even when GSTR1 is updated, 2A also gets updated. Now recipient also can see like his transaction already reflecting in his 2A. So he has some confidence that he'll get his ITC. So he can make the payments and all much more quickly. Okay. And even in e-way bill also. Sir, e-way bill has how many parts? 2 parts. Part A, Part B. Part A consists of what details? Invoice details. All those also will be automatically reflected once a e-invoice is generated. So e-invoice generated na 3 places it gets reflected. In GSTR1 it gets reflected. Immediately it reflects in 2A. And even in e-way bill also Part A gets updated. Okay. So first, to whom e-invoice is applicable? All registered persons with an aggregate turnover in any preceding financial year from 17-18 onwards is greater than rupees 5 crores. Then e-invoice is applicable, and it will be generated through what? Invoice registration portal. Okay. On such reporting on invoice registration portal will generate a unique invoice reference number. E-invoice is valid only with a valid invoice reference number, and this not applies to B2C. B2C means registered to unregistered, and if they are issued by ISD, input service distributor. Then look at the process, sir. You generate invoice normally in which format? INV01 format. Then the invoice generator will be downloaded in JS1 format. Then log into invoice registration portal and upload the JS1 file. Then IRP processes and adds a invoice reference number and digitally signs it. The digitally signed e-invoice will be given to recipient. Then invoice registration portal will auto-populate the invoice info in GSTR1 of supplier, 2A of recipient, and even in Part A of e-way bill. Okay. E-invoice can be cancelled if needed, but e-invoice cannot be amended. Then e-invoice is applicable to e-commerce operators, generated by e-commerce operators on behalf of suppliers. Okay. So e-invoice is applicable even to e-commerce operators. Bulk uploading of invoices is also possible. So these two are important, sir. What are these two? Exemption from e-invoicing, advantages of e-invoicing. These two only they are asking much in the exam. So e-invoicing not applies to whom? SCZ units. SCZ units, government departments, local authorities, insurance, banking, financial institutions. SCZ units, government departments, insurer, banking company, financial institutions, GTAs which are engaged in transportation of goods by road, suppliers like passenger transportation services like road transport, railways, all this, services by way of admission to exhibition of films in multiplex screens, and even OIDR. So these people are exempted from e-invoicing. Once again, sir, SCZ units. Sir, you might have a question like, sir, this movie tickets and all anyhow B2C only, na? Why? Sir, there is something called corporate booking. Corporate booking means what? Your company itself will book tickets for you, and for all the employees they'll give tickets and all. So that comes under what? B2B only. So that in that case also service by way of admission to exhibition of films in multiplex screens, OIDR and all, passenger transportation, engaged in transportation of goods by road, insurance, banking, financial institution. Okay, SCZ units. Then what? Government departments, local authority, insurance, banking, financial companies, GTAs engaged in transportation of goods, that also by road, passenger transportation, then exhibition of films in like multiplex and all, OIDR services. For them E-invoicing is not applicable. Then advantages of E-invoicing, what are those? Auto reporting of invoice in GSTR1 and auto generation of e-way bill. Why? Sir, once you generate e-invoice, immediately the data get reflected in GSTR1 and even in e-way bill part A also. So that auto reporting. Sir, since auto reporting is happening, sir, same data when we have to enter it, like let's say 5-6 places, same thing also, but with in the process of this entering itself, you may commit some mistakes, like 10,000. In all the 5 places, you should enter 10,000. So wrongly, you may add 1 0 less or you may add 1 0 extra. So those kind of errors are like what? Transcription errors. But now you are not adding at all these places. At one place only you will add. The same thing will get reflected in the all the places. So transcripting errors can be eliminated since same data is referred to tax department and even to the buyers. Facilitate standardization and interoperability leading to reduction of dispute between transaction parties. Sir, why disputes will be reduced? Sir, usually recipient will always have a doubt about supplier, whether he will show my transaction in GSTR1 or not. If he shows only, he'll get ITC. But now because of e-invoicing, what happening? It immediately gets reflected in 1 and even to him in the 2A. So it is bringing a standardized process and leading to reduction of disputes between both the parties. Then improve payment cycles. Why? Sir, now recipient is sure that he'll get ITC. So he need not to drag the payments and all until he get ITC. He can make the payments also immediately. So which improves the payment cycles. Since the payment is made quicker, processing costs also will get reduced. Overall business efficiency will be increased. Then the complete trail is available. Sir, we know like how it has been processed and all. Once invoice is generated, e-invoice is made. Then it reflected in GSTR1. From there in the GSTR2A, okay, and even in the e-way bill also same thing uploaded. Okay, so what is, we can see visibly what is happening and all here. So the complete audit trail is available. So complete trail of B2B invoice is available. It will enable the system level of matching ITC, output tax, and thereby reduces tax evasion. Okay, but e-invoicing, sir, to whom it applies? It applies to all the registered persons where the aggregate turnover in any preceding year starting from 17-18. So not in the recent year. From 17-18 to till the last year. If any year the turnover exceeds 5 crores, any year, either 17-18, 18-19, 19-20, then for the current year also what? E-invoicing applicable. Then dynamic QR code. So, okay, this is not relevant for us, sir. So this one. So this is enough for us, sir, for solving what? Question number 2A. So now the next topic is about what? Returns. Hello, Rajesh. Sir, from returns chapter also, mostly they gonna ask a straight theory question only. Like what? Let me show you the questions also. You can go back and check the past examination questions also. They're going to ask like what are the details to be submitted while furnishing the details in form GSTR 1, contents of GSTR 3B. Okay, then it's like what is GSTR 4A, what are the details to be submitted in GSTR 4A, who is NRTP and what returns has to be filed by NRTP. Then what is about GSTR 9, final return versus annual return, penal provisions for delay in filing GST return. Then what is called QRMP, okay, or else like what is like this GSTR 9C reconciliation statement. Okay, discuss the details to be provided in GSTR 9. Okay, all these are like repetitive only, sir. Okay, so the point is like simple, sir. They are asking like more like a straight theory kind of question only. Okay, so first we discuss about the returns, numbers, and what will be there in the each return, and then by when it has to be filed. GSTR 1, it consists of outward supplies. Okay, covered by section 37. It has to be filed by when 11th of succeeding month. So GSTR 1 has to be filed by 11th of succeeding month. Sir, in pulse and all, at some places, sir, it may be referred as like 10th in the concept book. So, but correct it to what? 11th only. So handwritten, sir. Sir, if you are following like full set of my books, whatever is there in the handwritten is only final. Okay. So if in the concept book, if you find any like concept book and verb book, if there is any mismatch at any place also, you can finalize the handwritten. Okay. You take the final view as like handwritten view. Okay. Or else you can message me that one also. Sometimes even if I didn't respond also, you can conclude like whatever is mentioned in the handwritten is only the final view. GSTR 1. What will be there in GSTR 1, sir? Outward supplies. By when it has to be filed? 11th of succeeding month. If at all quarterly return filing is there, then GSTR 1 has to be filed by 13th of succeeding month. Then GSTR 2A, 2B. Sir, 2A, 2B, nobody will file actual. It's okay. It is auto drafted, sir. So now 2A, 2B, with respect to that name auto drafted only, there is an amendment. Okay. So 2A, 2B. So 2A, 2B, it's okay. Still for our convenience, we may use like auto drafted only, sir. But there is a small amendment there under 2A, 2B. So 2A, 2B, we will not file. It gets automatically reflected, sir. So that's why there is no due date. But understand, it reflects only after 13th. I mean from 14th only it gets reflected. Usually 2B. Why? One normal filing na by 11th. Quarterly filing na by when it has to be filed? 13th. Once one is filed, then only it reflects in the 2B. That's why from 14th only it reflects in the 2B. Then 3B. So 3B is the monthly return. Month on month, the regular return which has to be filed by every registered person is like GSTR 3B. What is the purpose of 3B? Sir, in 1, you will show all your outward supplies. In 3B, you'll calculate the tax payable, the final tax payable, the summary of all your outward supplies, the ITC available, all those you will be showing in the 3B, and through 3B only you will be paying the GST liability also. By when it has to be filed? 20th of the succeeding month. In case of QRMP, na, there is like 22nd or 24th. We'll understand in the QRMP place. Then GSTR 4. GSTR 4 applies to whom, sir? Composition scheme persons. They'll report their outwards in GSTR 4. By when? 30th June of succeeding financial year. 30th June of succeeding financial year. Then GSTR 5. 5 applies to NRTP. NRTP means whom, sir? Non-resident taxable person. He has to file what? GSTR 5. By when it has to be filed? 13 days from tax period or 7 days from last day of validity, whichever is earlier. 13 days from tax period or 7 days from last day of validity, whichever is earlier. See, sir. Sir, who is called NRTP? Non-resident taxable person. So he is a non-resident. Okay. Sir, then why he is providing services? He came to India temporarily. He he supply goods and services or both occasionally. He don't provide permanently. He'll be here for occasionally. Example, a pop singer from some foreign country came to India. He performs in like some 3 or 4 shows and then again he'll go back. Then he's called what? NRTP. So NRTP, he registered on when 10th May 2025 and his validity is up to 4th July. So how many months is there, sir? May, June, July. So 3 months he has to file what? GSTR 5. What is the due date? 13 days from end of the month or 7 days from last day of validity for all the 3 months. 13 days from the, next month 13th or 7 days from last day of validity. Sir, 4th July plus 7 days, how much? 11th July. So all the 3 cases we took what? 11th July. Then next month 13th. May next month 13th na June 13th. So June 13th or 11th July? June 13th is earlier. Then for June month. Next month is what, sir? July. So July 13th or 11th July. Which is earlier, sir? July 13th. Then for July month. Next month is what? August. So August 13th or 11th July. Whichever is earlier. Sir, what is the due date, sir? Next month 13th or 7 days from last day of validity. Whichever is earlier. Then GSTR 5A. GSTR 5A applies to OIDR, Online Information Data Access and Retrieval Services, OIDR, outside India, providing supplies to whom? To a non-taxable person. Then it has to be filed by when, sir? 20th of succeeding month. Then GSTR 6 applies to ISD. ISD means Input Service Distributor. What is Input Service Distributor? Sir, a corporate office, head office has so much of inwards, but it doesn't have outwards. And all those inwards are not related to head office alone. They are related to all the branches. So the ITC also has to be distributed to all the branches. To distribute the credit, this head office or corporate office has to register itself as an ISD. When it is registered as an ISD, it has to file what? GSTR 6 by when? 13th of the succeeding month. Then GSTR 7 applies to TDS applicable persons. They have to file by 10th of succeeding month. 8 applicables to TCS applicable person. They have to file by 10th of succeeding month. 9 annual return. Annual return has to be filed by 31st December of succeeding financial year. Then the final return. Once your business is closed, like your registration is cancelled, then you will file what? GSTR 10 by when? 3 months from date of cancellation or order of cancellation, whichever is later. So 3 months from date of cancellation or order of cancellation, whichever is later. Then GSTR 11. 11 applies to, sir, UIN holders. Who are UIN holders? Sir, for normal registered persons and all, GSTIN will be given. What is called GSTIN? Goods and Service Tax Identification Number. But if they are like embassies, foreign consulates, or international bodies like IMF, okay, those kind of foreign embassies, consulates, or like international organizations and all, for those people, instead of regular GSTN number, for them UIN will be given, Unique Identification Number. So those people, their outwards are exempted anyhow, but they receive any inwards. On them, whatever is the tax element is there, that they can get again as refund. So to get that refund, they will file their report of their inwards. So those inwards, they're going to report in GSTR 11 by when? 28th of the following month. Sir, one is what? Outward supplies by when? 11th of succeeding month. 2A to B, auto drafted only. 3B, 20th of succeeding month. Normal person, he'll be paying taxes through 3B. 4, composition scheme person, when 30th June of succeeding financial year. 5, NRTP. Next month 13th or 7 days from last day of validity, whichever is earlier. Then GSTR 5A, sir, OIDR, when supplying to non-taxable person, 20th of succeeding month. 6, ISD applicable person, 13th of succeeding month. 7, TDS people, 10th of succeeding month. 8, TCS people, 10th of succeeding month. 9, annual return by 31st December of succeeding financial year. Then 10, final return 3 months from the date of cancellation or order of cancellation, whichever is later. Then 11, to UN holders, they will be reporting their inward supplies by 28th of the following month. Then GSTR 1A. So what is, sir, GSTR 1A? I'll explain it afterwards along with GSTR 1. So before going into GSTR 1, sir, we'll discuss even late fees also. Late fee, sir. So directly we can discuss in the workbook itself. It might be much more better, I think. If any. Discuss the penal provisions for return filing. So first one, GSTR 1 and 3B related. 1 and 3B related. Sir, whatever I discussed, it could be asked like straight away question. Write about different GST return formats and their due dates. They can ask like directly. Or else like they can ask like write about the different GST returns and their penal provisions applicable also. Okay. So 1 and 3B. Sir, if registered person has no tax payable, nil return he is filing. 1 and 3B. Any of them he is filing and no tax payable at all. Then the late fee is like rupees 10 per day, maximum 250. 10 per day, maximum 250. That is only CGST element, sir. SGST also same amount. Another 10 per day, maximum 250. So together if you do, how much, sir? 20 per day, maximum 500. So individually CGST, SGST separately na 10 per day, maximum 250. So when 1 and 3B, no tax liability at all. Then 1 and 3B, when the aggregate turnover is within 1.5 crores, turnover is within 1.5 crores, then per day the late fee is like 25, maximum 1000. If the turnover is like between 1.5 to 5 crores, then 25 per day, maximum 2500. Then any other case na turnover more than 5 crores, then 25 per day, maximum late fee is how much, sir? 5000. Okay. GSTR 1 and 3B. Nil return now, what is the late fee, sir? 10 per day, maximum 250. Okay. Tax payable is there, but the turnover is within 1.5 crores. 25 per day, maximum 1000. Okay. 1.5 to 5 crores turnover. Then 25 per day, maximum 2500. Above 5 crores, 25 per day, maximum 5000. Sir, composition scheme person also similar to the first two only. See. Sir, one basic logic first you understand. Till when his turnover reaches, composition scheme person is eligible? 1.5 crores. That means the first two, here also second point is like what? Turnover up to 1.5. So both are like similar. Nil return na 10 per day, maximum 250. Otherwise composition scheme person. Otherwise also composition scheme person means his turnover could be how much? 1.5 only. Up to what is the late fee? 25 per day, maximum 1000. Nil return na 10 per day, maximum 250. Other case na 25 per day, maximum 1000. It's okay. 1 and 3B, GSTR 4. Then 5. Nil return, GSTR 5, nil return, sir. 10 per day, maximum 5000, sir. 5000 CGST, 5000 SGST. So add that another 5000 also. 5000. It's not like cumulatively 5000. 5000 for CGST and 5000 for SGST. Then, sir, nil return also same. Nil return na 10 per day, maximum 5000. In case any tax, sir, GSTR 5 has to be filed by whom? NRTP. Okay. In any other case na what? I mean tax payable is there. Then 25 per day, maximum 5000. Then GSTR 6, ISD applicable person. 25 per day, maximum 10,000. So 10,000 CGST, 10,000 SGST. GSTR 7, TDS applicable person. 25 per day, maximum 1,000. Okay. Then TCS applicable person. 100 per day, maximum 5,000. 5,000 CGST and 5,000 SGST. Then GSTR 9, annual return. Like what? When the, sir, here also based on turnover. Turnover up to 5 crores. 5 crores to 20 crores. Above 20 crores. Up to 5 crores, na. 50 per day, sir. 50 means cumulative, sir. Okay, separately, na. 25 per day. 25 per day or 0.02 percentage of turnover, whichever is lower. 25 per day or 0.02. Sir, cumulatively, na. 50 per day or 0.04. Since we discussed all these like separately only, so this also I am saying like separately only. 25 per day or 0.02 percentage of the turnover, whichever is lower. When the turnover is up to 5 crores. 5 crores to 20 crores. Then it is like 50 per day or 0.02 percentage of turnover, whichever is lower. Above 20 crores na 100 per day. So what is the late fee, sir? Up to 5 crores na 20 percentage anyhow common only. That's why 25 per day, 50 per day, 100 per day. Up to 5 crores turnover na 25 per day. 5 to 20 crores na 50 per day. Above 20 crores na 100 per day. Or all these three or 0.02 percentage. Okay, whichever is lower. Maximum only, there is no maximum cap here. This only is allowed. I mean, this is the late fee. Okay, so this is about what late fee under. Okay, so we discussed two questions are already. One is like different return filing formats and their due date. Second one is what? The penal provisions for return filing. Now we are moving on to GSTR 1. Sir, directly sir, GSTR 1 also. Okay, I'll discuss here. GSTR 1 alone, sir, there will be little difference between the handwritten and the workbook question. So ultimately, we have to follow what? Workbook question, the format only we have to follow. Okay, rest all are like same only, like whatever we see in the workbook and whatever in the handwritten, both will be aligning only. Okay, see here, first one, GSTR 1. Every registered person including CTP shall furnish details of outward supplies of goods, services or both. Okay, every registered person including CTP. Who is called CTP, sir? Casual taxable person. Similar like NRTP only. NRTP na he comes from outside. Casual taxable person na he come from some other state and temporarily provide goods and services here and he goes back. So here temporarily only now he is called as what? Casual taxable person. So every registered person including CTP shall furnish details of outward supplies of goods, services or both except tonic. Okay, so these people need not to file GSTR 1. Who? TDS and TCS applicable persons. Why? They have separate returns. 7, 8. OIDR 5A. NRTP GSTR 5. ISD GSTR 6. Okay, composition scheme person GSTR 4. That's why since these people have separate file for return filing formats, they will not file GSTR 1. Okay, all the outward supplies has to be reported where? GSTR 1. The due date of filing GSTR 1 is what? 11th of succeeding month. GSTR 1 cannot be filed till the closure of tax period. Okay, what are the sir, that's a basic logic, sir. GSTR 1, what will be reporting? Outward supplies. Before the end of the month, how could you know what are your supplies in the month? Even on last day also, you can make certain supplies. That's why usually you cannot file before the closure of month. Exceptions are what? CTPs on their closure, taxpayers when their GST is cancelled. What are the contents, sir? Sir. So I think. Okay. The contents will be what? The GSTN number, legal name and trade name. Sir, legal name, trade name, both might be different. So, okay, let's say if you take the example of Facebook, Instagram and all, their legal name is like Meta. Okay, but their trade name is like what? Instagram, Facebook, okay. So, those WhatsApp, it's okay, those come under like trade names. Then, their annual aggregate turnover in preceding year, tax period, all this has to be. Then, B2B supplies are, B2C supplies are zero rated. Zero rated means exports or supplies to SCZ are called as zero rated. And the supplies also has to be shown HSN wise. And then nil rated exempted supplies also has to be shown. If any documents issued, debit credit note, advances received and adjusted. If any amendments has to be made, all these should be there in the GSTR 1. The details. Okay, the details furnished by supplier in GSTR 1 will be auto-populated in GSTR 2A to be after 11th of succeeding month. Okay. Then requirement to, sir, now in GSTR 1 what we discussed, outward supplies will be reported. Now the question is, does each and every invoice has to be shown separately? Not required, sir. Some invoices you can do consolidatedly also. But when you can consolidate and show, which has to be shown? Separately. Sir, B2B has to be shown separately. Why? Only when they are shown separately that could be reflected in the GSTR 2B. If you put totals, how can system know? How can it match to the corresponding recipient? That's why B2B should be mentioned invoice wise. B2C, then we need to check what? Intra. If it is intra-state, you can show them what? Consolidatedly, but rate-wise. Sir, I made sales from here, all within the state only. What I can do? B2C and within the state. All of them we can total and show, but rate-wise. 5% one total, 12% related total, 18% related total, so that rate-wise. Interstate. If it is B2C and made like what? Interstate. Then we need to check invoice value more than 1 lakh, within 1 lakh. More than 1 lakh, show them separately. Within 1 lakh, sir, all those can be shown consolidatedly, but state-wise and rate-wise. Sir, from here, I sell to Karnataka also interstate, Tamil Nadu also interstate, Maharashtra also interstate. But all those I cannot add and show consolidatedly. All the Tamil Nadu related I can add and show. All the Karnataka related I can add and show. So interstate na, for each state separately I have to consolidate, and within that also I have to show that rate wise separately. Okay. Then HSN code. Sir, HSN means what? For every good there is a 8-digit code is given. That 8-digit code is called what? HSN code. Okay. But whether all those 8 digits has to be mentioned? No, sir. Depending on your turnover, if your turnover is like above 5 crores, then irrespective of B2B or B2C, at least 6 digits of HSN code you have to mention. If it is within 5 crores, then 4 digits. Above 5 crores na 6 digits, within 5 crores na 4 digits. Then amendment of GSTR 1. Sir, what will show in GSTR 1? Outward supplies. But in the outward supplies you shown, there is a mistake. In the outward supplies you shown or you reflected, there is a mistake. Then how do you get rectified is the question. Sir, previously you can rectify it only in the next month. So when let's say Jan month you filed return, then in February you identified you did a mistake in the Jan month. Though while filing February month return, you can even make corrections of the Jan month also. Okay, like that it used to be there. Now there is another option is filed. Okay, now what? Sir, now tell me by when GSTR 1 has to be filed? 11th. Assuming we filed on due dates only. When 3B has to be filed? 20th. Okay. So now if you identified that there is a mistake, error or omission within this period only, I mean you filed 1, but before filing 3B only you identified that there is a omission, error or mistake, then you can use GSTR 1A. So there is an option called GSTR 1A has been introduced. Okay. So identified before filing GSTR 3B of the month or quarter, then amendment can be made using GSTR 1A. If it is identified after filing 3B, then we can be amended by way of amending of tables given in the GSTR 1 of subsequent tax periods only. Okay. So what is the time period for rectification, sir? Let's say, sir, 1 year na, by 3B filing only you can do. But if it is like succeeding months later, na, sir, 5 years back I did a mistake in GSTR 1. Can I rectify it now? So then there should be some time limit, right? What is the time limit? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Even though no supplies are made in a month, a nil GSTR 1 also has to be filed. GSTR 1 of a month cannot be filed without filing GSTR 1 of a previous tax period. Okay, now sir. So what are the questions? First one. What are the details to be submitted while furnishing the details of GSTR 1? The supplier has to furnish the details of invoices, debit notes, credit notes and revised invoices in relation to outward supplies. It may be invoice, debit note, credit note, revised invoice, all those whichever you issued in a month has to be reported. Okay, you need to disclose what? Supplies made to registered person, interstate supplies made to a consumer where invoice value is more than 1 lakh. Interstate supplies more than 1 lakh only you will show separately. Okay, within 1 lakh now you will do what? Consolidation. Zero rated supplies, consolidated amount of interstate supplies and intrastate supplies to a consumer for each rate of tax. Then zero rated, exempted, nil rated exports. Okay, all this you will show separately. Tax liability arising in the current tax period. Sir, time of supply current month only. But invoices were not at all raised. Sir, understand? Before raising invoice also time of supply may come. So time of supply in the current month only, but invoice will be raised in the next month. So those supplies show separately. So why? Because already tax has to be paid in the current month only, but invoice will be raised in the next month. So those has to be shown separately. Same way, invoice raised in the invoice raised in the current period, but already time of supply was taken in the past months only. So those also has to be shown separately. Okay, then supplies made through e-commerce portals and all, HSN code, all this has to be mentioned. Okay, even the last question from this chapter, sir, that was an exam question. Okay, not last one, sir, last but one, I think. Okay, question number 14. Question number 14. What happened? Short traders registered under GST in Gujarat. Sir, what I said, like usually a theory question only will be asked, right? But in June 2025 exam, that invoice wise limits are there, right? We have to show invoice wise when the invoice value is more than 1 lakh in case of interstate transaction. Previously that used to be 2,50,000. So for June 25 term, that is an amendment. That's why they focused this question on amendment. Okay, see, short traders registered under GST Gujarat is engaged in making taxable supply of goods and services. It furnished the details of outward supplies in GSTR1 for the month of February on 11th March. However, on 14th March, accountant of short trader noticed that one invoice issued to Bhavana traders for supply of goods valuing 2,80,000, okay, pertaining to February has been missed to be declared in form GSTR 1 furnished for February. He has approached you for advising before furnishing 3B for the said month. You are required to briefly discuss whether short traders can amend the details of outward supplies in GSTR 1 of February. If such amendment is permitted or amended, whether the details of said invoice will be available in GSTR 2B. Sir, this is, sorry, it's not related to invoice, it is related to GSTR 1A. Sir, what? He already filed GSTR 1. But he missed what? This invoice worth 2,80,000. What are the two options available? Two options. If already 3B, if not 3B is not filed, I mean he identified when, sir? 14th March. Okay, when 1 is filed 11th March. 3B will be filed on 20th March. So before filing 3B only he identified. So what is the option available? He can file it through GSTR 1A. Okay, registered person after furnishing the details of outward supplies, but before filing 3B, at his own option, amend or furnish additional details in GSTR 1A. Thus, in light of the above, we can see short traders can amend the details in GSTR 1. Short traders has the option to furnish the details of invoice issued to Bhuvan traders in 1A on or after 11th March, but before filing 3B for February. Okay. So, but when the change will be there in 3B, the corresponding effect of changes made through 1A on the liability of short trader will be reflected in 3B for February. 1A does not allow the amendment of documents related to recipients in GSTN. Okay. Sir, okay. So they made like, so okay, so even institute also giving ChatGPT answers only, so I should answer. So okay. So what? Sir, usually what happens now? Already that to be got reflected. See what happens, sir, once you file GSTR1, it's okay, by 14th already it gets reflected to the recipient in GSTR2B gets already reflected. Now even if you file GSTR1A, it will not reflect immediately there. So okay, it gets again updated only in the next month only. It gets updated only in the next month. Okay, so where, so this first para they'll explain something, but see, the 2B of the recipient will include all the suppliers declared or amended in 1A by the supplier. However, this change will only appear in the subsequent open GSTR2B. Thus in the given case, will not be available in the 2B for February, when they will be there in the month of March. Okay, so then Form and manner of GSTR 2A to B. So what is 2A to B? So 2A is dynamic in nature. When this e-invoice and all are there, then immediately it gets reflected where? 2A. But 2B gets reflected only once in a month. When it gets reflected? When supplier files GSTR1, then based on that finalized information only 2B gets updated. Okay, so I said like here amendment, sir. What is the amendment? Earlier 2B is called as what? Auto-generated statement. But now 2B is called as a statement. It's just a statement, that also a control and rule based statement, not auto-generated statement. It is called as a control and rule based statement. Why? Sir, previously, whatever the reported in GSTR1, based on that it will reflects automatically in the GSTR 2B. But now 2B is divided into two parts. Eligible ITC, ineligible ITC. Okay, eligible ITC na, the ITC which you can use. Ineligible na, temporarily it may got freezed. When, let's say you purchased goods from a newly registered person, then your ITC will be freezed for some period until the cooling period is completed. Or else like your supplier has made some defaults in filing GSTR returns, then from him if you get any ITC, that also gets freezed. Or your supplier not availed ITC properly, then your ITC also gets restricted. So because, sir, those rules are not yet made effective. Law has been made, but rule is not yet made effective. So now currently, whatever the invoice is reported in GSTR1, that won't be given as ITC immediately, or automatically. That again be classified into what? Eligible, ineligible. So that classification is being made now. So it's not auto-drafted. Auto-drafted now, whatever is there, it should reflect automatically. But now what? Extra they are even filtering that into two categories. That's why it was called as what now? Control and rule-based statement, not just simply auto-generated statement. Then monthly return. What is called monthly return, sir? The current monthly return is what? GSTR 3B. Who are not required to file GSTR 3B? Tonic. Tonic means what? TDS, TCS applicable persons, OIDR, NRTP, ISD, and person paying tax under Section 10. Sir, here also one thing, sir. A simple amendment, sir. Earlier, the return has to be filed within such a time is there. That such a time is given in the rules. What? 20th of succeeding month. Now what? Now after amendment, what it is said, like file return within such time subject to conditions and restrictions. Why condition? So they added this word here. The amendment is like they added the word like what? Subject to conditions and restrictions. Why? Sir, sometimes your GSTR 3B filing facility itself will be restricted. When, like let's say, there is a mismatch between your GSTR 1 and 3B. Then what? They'll ask you to explain the differences and all. If you are not explaining the differences and all, then your 3B filing facility itself can be restricted. So that's why what they are saying, like after filing the return has to be filed within such time subject to conditions and restrictions. Okay, this is the word. Okay, exam wise there is no much difference for these small words and all. In assessment and all, in the dispute related areas and all only, litigation cases only, all these small words also will have importance. For exam purpose, they will not much focus on these little words also. Okay. Now, the content of GSTR 3B, sir. GSTR 3B is a simplified monthly return and it does not require invoice-wise details of outward supplies. It does not require invoice-wise. Okay. So, what are the content of GSTR 3B? GSTR 3B consists of 6 tables. Okay. First one, GSTR number, legal name, summary of outward and inward supply. First one, GSTR number. Second one, legal name. Third one, summary of outward and inward supplies. Sir, why inwards? Outwards, tax liability is there. That's why you have to show summary of outwards. And inwards, not all the inwards, which are taxable under RCM. Because he only has to pay the tax rate. That's why inwards RCM related and all the outwards. And classify the interstate outwards into interstate outwards. We should show separately how much is made to unregistered person, composition scheme person, and to UAN holders. Then summary of eligible ITC, Then that ITC also has to be shown separately. IGST, CGST, SGST, UTGST and cess. Then summary of exempted, nil rated and even non-GST inward supplies. Then details of payment of tax. Category wise tax payable, ITC availed, TDS credit and tax paid in cash along with interest and late fee. Okay. GSTN number, legal name. Then outward supplies and inward supplies taxable under RCM. Then the outwards interstate show separately how much is to unregistered, how much is to composition, how much is to UIN holders. 3 points done. Then fourth one, ITC breakup. IGST, CGST, SGST, UTGST and all. Then summary of exempted, nil rated, non-GST. And the details of payment of tax. Like category wise, CGST, SGST, IGST, how much has to be paid, how much ITC available, how much TDS credit is there, finally how much is the tax paid in cash. Okay, sir, even in workbook also the same will be there, sir. Analyze the content of GSTR 3B, same thing will be there. Okay. The content of GSTR 3B, this question will be same. Then we are moving on to GSTR 4. Composition scheme person. Sir, every person registered and opted to pay tax under section 10 subsection 1 or 10 subsection 2A shall file return in where GSTR 4 annually. Every person registered and opted to pay tax under section 10 subsection 1 or 10 subsection 2A shall file return where in GSTR 4 annually. That has to be filed by when? 30th June of succeeding financial year. So composition scheme person will file return annually. That also by when? 30th of June succeeding financial year. But the tax payment has to be made quarterly. Sir, when return is filed annually, tax has to be paid what? Quarterly. By using what? CMP 08. By when it has to be paid? 18th of the month succeeding the quarter. Then a nil CMP 08 or GSTR 4 also has to be filed. Okay. So when supplier reports GSTR 1, then GSTN will reflect them to the recipient. Sir, for normal people, inwards will be reflecting in 2A, 2B. For composition scheme person, it reflects in 4A. Okay. So details need to be furnished in GSTR 4. Okay. In GSTR 4, what has to be shown, sir? Invoice wise details of inter and intrastate inward supplies from registered person and unregistered person. Interstate and intrastate inward supplies from registered and unregistered. Invoice wise, sir. Inward supplies invoice wise. Outward supplies consolidated. Consolidated details of outwards. So composition scheme person, inwards invoice wise. Sir, he will not add anything from 4A, whatever is there, he will just dump them into the GSTR 4. So invoice wise inwards, but outwards consolidated. Okay. Why? Because from composition scheme person, if you buy, you will not get anyhow ITC. That's why he will show what? Consolidatedly. If any imports are there, they also. Debit and credit notes if any issued. TCS credit. Consolidated statement of advances paid and adjusted. And amendment of outward supplies furnished in earlier returns. So amendments, debit credit notes, TCS credit if any is there, advances received and adjusted, consolidated details of outward supplies, invoice details of invoice wise of inward supplies, and even import of goods and services. These are the contents to be mentioned in the GSTR 4. Same in workbook also, same answer will be there, sir. See, the same points will be there. Okay. Then NRTP. Sir, who is NRTP? NRTP means a person who occasionally undertaking transactions involving supply of goods, services or both, whether as a principal or as an agent. He undertakes transactions occasionally, not regularly, okay, related to goods, services or both, either as a principal or as an agent, but he has no fixed place of business or residence in India. He doesn't have a fixed place of business or residence in India. Like what example, a BTS troupe came to perform a concert in India. Okay. Now NRTP has to file a monthly return, even though it is a full month or part month. 1 and 3B not applicable. For him, which return applicable, sir? 5. By when it has to be filed? 13 days after the end of calendar month or 7 days from last day of validity, whichever is earlier. Then GSTR 6. If ISD, sir. By when? 13th of the succeeding month. 7. TDS applicable person, 10th of the succeeding month. 8. TCS applicable person, by when? 10th of the succeeding month. Then, sir, we're going to discuss about first return. What is this concept of first return? Sir, let's say on November 1st, your turnover exceeded 40 lakhs. On November 1st, your turnover exceeded 40 lakhs. That means what? From November 1st, you got the liability to register. So once the liability to applies, you need to apply for registration within 30 days. Sir, understand? The date of liability, okay? From there, within 30 days, you need to apply. If you apply within 30 days, then the date of liability itself is your effective date of registration. Sir, 1st November, you got the liability, right? You applied on November 27th only for registration. Since you applied within 30 days only, from 1st November, you will be counted as registered, okay? Whereas if you applied after 30 days, then the day when you got the certificate, that day only will be counted as registered. Understanding, sir? Okay. So when you apply within 30 days, from the date of liability only you are considered as registered. When you applied after 30 days, then from the date you got the certificate, that day only you will be counted as registered. Sir, this only better now, sir. Lately will be counted as registered. The problem is what? You lose ITC. All this period you lose ITC. Sir, okay, sir, anyhow I will not paying tax now, ITC I lose also, fine. But go back to the supply definition. Basic definition, what I said. Supply includes sale, transfer, barter, exchange, license, lease, rental, disposal carried out by a taxable person. Who is called taxable person? Registered, or who has the liability to register. So this person, even though not registered, he has the liability to register. So the transaction he did also supply only, taxable only. So he has to pay tax but cannot avail ITC. So that's a loss only to him. Okay. So the point is, but understand, sir. Sir, 1st November liability. Applied on 27th November. Certificate got on 10th December. But he will be counted as registered from when? 1st November only. But he got certificate only on 10th December. Sir, if you are a registered person, you need to give proper invoice and all. Okay. But you got your GSTN number only on 10th December. But from 1st November, you are counted as a registered person only. So all these 40 days, you made an invoice without any proper GSTN number only. So all those are not valid invoices. So what you have to do? You have to give a revised invoice with a proper GSTN number now. Okay. Now this 40 days, whatever the transactions you made, all these 40 days later, you will mention in a single return. That return is called as first return. Sir, usually in a return, you can show only 1 month details. But in first return, even though the transaction spread across multiple tax periods, still you can show. Okay. For which period? From the effective date of registration, like nothing but the date of liability, till the date of grant of certificate. In our example, 1st November to 10th December. All those can be reported in a single return. That's called what? First return. Okay. So this is only about first return. Okay. To enable registered person to declare the supplies made by him for the period between date of liability and date of grant of certificate, first return has been introduced. The outward supplies made in that period will be reported in first return. The format of this return is same as that of regular return. Okay, then annual return. We are into what? Annual return. So annual return, like what are, how many are there? GSTR 9, 9A, 9B, 9C. GSTR 9, annual return. Okay, 9A. 9 are currently discontinued, sir. It applies to composition scheme persons. Why discontinued? Na? Already is filing what? Yearly one return only, GSTR 4. Originally, it used to be quarterly ones, but then made to annual ones. Okay, so now already he is filing GSTR 4 also annually. Why again this one? So that's why this is discontinued. 9B, sir, it applies to persons to whom GSTR 8 is applicable. 8 applies to whom? TCS. Okay, those people will be filing GSTR 9B. Then 9C. 9C is about reconciliation statement between GSTR 9 and audited books of accounts. Okay, now all annual return. All the registered persons are required to file annual return. All the registered persons except tonic. TDS, TCS applicable persons, OIDS, NRTP, ISD, composition scheme 9B is not there anyhow, and even CTP is also now. Sir, CTPs will file 1 and 3B, but will not file 9 because they came for temporary period, sir. Annual return after year end they have to file. Till that time they won't be there here. That's right. Okay. The due date is what? 31st December of succeeding financial year. What are the contents, sir? Advances, inward and details of advances, inward and outward supplies during the financial year on which tax is payable. Details of outwards on which tax is not payable. So both on which tax payable, tax not payable. Then if any IDC availed during the year and IDC reversed or ineligible during the previous year. So, during the financial year, both, sir. Availed and even reversed and ineligible also. Then details of tax paid as declared in returns during the financial year. Like every month, how much is the tax you paid. That also has to be shown. And details of any preceding financial year transactions reported in the next financial years. I mean last years in the current years in the last year, those details. And because of this sixth point, if any difference tax is there, that also has to be shown. Then particulars of any demand and refunds. If any refund you got or if any demand notices you got, all those. Then supplies received from section 10 persons or if any deemed supplies from job worker. And HSN wise summary of outward and inward supplies. Okay, na sir? Sir, what are the points, sir? Outwards, taxable, tax payable and non-tax payable also both. IDC availed, IDC reversed or ineligible both. And then details of tax paid in every monthly return, that one. And then preceding financial year transactions to be reported in the next year, those. And because of these reporting in next years, the tax difference, if any is there, that amount. And then particulars of any demands and refunds. Supplies received from section 10 person or deemed supplies by job worker. And then HSN wise summary of outward and inward supplies. Okay. Then, sir, this existing provision only, every year they'll release this continuation what? Annual return need not to be filed by every registered person. Only his annual turnover is like above 2 crores he has to file. Within 2 crores now not required to file annual return. Then, sir, this is like even in the workbook also same will be there, sir. NRTP, same question as we discussed. Then GSTR 9 also same points will be there. Then next one is about what? Reconciliation statement. Reconciliation statement has to be filed by every registered person whose aggregate turnover during financial year exceeds 5 crores. Sir, not every registered person has to file reconciliation statement. Only when his turnover exceeds, sir, about 2 crores only annual return. Above 5 crores, na, then even reconciliation statement also. Okay. And originally, sir, this reconciliation statement has two parts. Part A, Part B. Part A, the reconciliation. Part B, certification. This certification, originally it has to be signed by practicing CA or CMA. Then it was removed. It can be now self-certified. Okay. The registered person himself will self-certify. But the question is, what they do reconciliation? So, okay, it has part 1, part 2, part 3, part 4. Part 1, they do the basic details they'll give, like GSTN number, all these things and all. Part 2, they'll reconcile the turnover as per their P&L. In accounting, audited financial statements P&L, what is the turnover they have shown? And in 3Bs, okay, how much is the turnover they have shown? That they will be comparing. As per GST, how much you reported as turnover, to the shareholders, how much you reported as turnover, that breakup. But one point important, sir. Sir, financials are prepared at like company at a whole level, like PAN level. But registration, GST registrations are like what? Registration wise. So what? Sir, a company might have 4 branches. 4 different GST registrations. All that aggregately they'll show it as what? Sales in the P&L. But here to do this reconciliation, we need what? Turnover registration wise. So that P&L turnover again has to be divided registration wise and then compare it with how much you shown in the GST returns and do the reconciliation. So financials are at PAN level, whereas GSTR 9 is registration wise. Then we need to show what? Breakup and then compare. Reconciliation of tax paid also. How much is the tax paid debited into P&L? How much is the tax liability as per books of accounts? Thus breakup also has to be seen. Then reconciliation of ITC also. Okay, that is about what? Reconciliation return. Then final return. Every registered person whose registration is surrendered or cancelled shall file what? Final return within 3 months from date of cancellation or order of cancellation, whichever is later. It's okay. So we have another 10 minutes, sir. We'll complete even QRMP, so that we'll complete all our the 2A, 2B concepts we're gonna complete. Okay. So QRMP. QRMP means what, sir? Quarterly return and monthly payment scheme. Sir, instead of filing return monthly, they gave an option to file what? Quarterly. But tax payment have to be done monthly only. Only return filing has to be done quarterly. Sir, why? Sir, every month business people, so most of the people, they don't know filing return on their own. So they need to go to a consultant. Every month when they go to consultant, it's costing them some 5,000 to 10,000. So okay, to reduce their cost, instead of going to the consultant every month, they'll go what? Quarterly once. It's okay. But the problem is, sir, how do they pay tax payment then? It's okay. So tax payment, the system itself will calculate and tell the tax payment also. So they need not to rely on any consultant and all. So they can pay on their own also. That option is also has been given. It's okay. We'll understand deeply. So the main objective is like to reduce the compliance burden. To reduce compliance burden to small and medium businesses. To whom it is applicable, sir? Whose aggregate turnover is up to 5 crores in preceding financial year. Sir, composition scheme for one branch or for one registration you are ineligible. Then at PAN level you are ineligible. All the other registrations also you are ineligible under composition scheme. But here, sir, even though for one branch you didn't opt for QRMP, for another registration you can opt for QRMP. Sir, then opting in for QRMP. Let's say, sir, understand, for April, May, June quarter, you want to be in QRMP. Then, what is the preceding quarter, sir? Jan, Feb, March. So, this is what? Preceding quarter. So, in preceding quarter, what is the second month? Feb. So, from Feb 1st, you can opt into QRMP for April, May, June quarter. So, okay, you want to opt into QRMP for April, May, June. Preceding month, preceding quarter, second month, first day. Preceding quarter. What is the preceding quarter? Jan, Feb, March. That quarter, second month, February, first day. From there, you can opt in till the current quarter. What is the current quarter, sir? The quarter which you are opting in. April, May, June. What is the first month? April. So, in the first month, last day, that means 30th April. So, from February 1st to 30th April, you can opt into QRMP for which quarter? April, May, June. Sir, you want from May 1st, if you opt in, it will be counted for which quarter? July, August, September quarter. Are you able to understand, sir? So, that's what opt in. Even if you want to opt out also, same time period only. Okay. The opt in is like what? First day of second month of preceding quarter to last day of first month in which the option is being exercised. Okay. Method of payment of taxes. Sir, self-assessment method nobody will follow, sir, under QRMP. Why? What is self-assessment method? Nothing but like how you compute normally if you file return the tax payment on all. Like on your outwards, you have to calculate tax liability and you need to find out your ITC, adjust that ITC, balance how much is payable, that only you will pay. That's what self-assessment method. Sir, if that method, if all that you can do now, file return also, why you need to postpone return filing to quarterly? The problem is what? Computing tax is only problem. If that itself you can do, then file the return also. That's why nobody will go for what? Self-assessment method. But there is another option called what? Fixed sum method. In fixed sum method, we will not calculate the tax liability. System only will calculate and show the tax liability. Sir, how system will calculate, sir? Based on the past tax period data, previous tax period data. Sir, for April, May, June quarter. Okay. Previously, it will check whether you filed quarterly return or monthly return. Sir, you are continuing under QRMP, not the first time. So, even preceding Jan, Feb, March also you paid in QRMP. That is one situation. Second one, first time you are in QRMP. Then past what? In March month you paid monthly. So, okay, see, the challan gets auto-generated by system itself. In which form? PMT06. But how much will be generated? See, preceding quarter is like return filed quarterly. Preceding month return filed monthly. So preceding it is like quarterly return, preceding is like what? Monthly return. If it is like preceding monthly return, whatever you paid in the preceding month, that will only be taken as the liability even in the quarter. Sir, in a quarter, how many months are there? Like April, May, June. Sir, for June month, no problem. Because once June ends, na quarter also ends. You will be filing return only. Along with return, you will pay tax. The problem is for what? April month and May month. Now what system says means, in March month, how much ever the tax you paid, that only will be taken as April month liability and even as May month liability also. It will not calculate anything extra. Last month what you paid, that only will be taken as liability of April month and even for the May month. Okay, let's say sir 1 lakh you will pay. Now in June month what you will do? June month, sir anyhow June completes means quarter also completes. So now you will do the actual supplies made. Okay, so based on that the actual tax payable is like 3.3 lakhs for the whole quarter. But you already paid in April how much? 1 lakh minus 1 lakh. May also how much? 1 lakh. Then balance 1.3 lakhs you will pay at the time of filing June month. The return after the closure of quarter. Okay. Sir, previously it's not monthly filing, sir. Previously quarterly filing. Then what we will do? Sir, okay. Previous quarter your tax liability is like 3.3 lakhs. Okay. Then what system will do? Into 35%. That will be given as like, sir, into 35% now how much, sir? 3.3 into 35%. 1.155 lakhs. This is for April month and even for May month. Okay, now after June again what you'll do? For the total 3 months, how much supplies you made, how much IDC available, you'll do all the normal calculation. Let's say it is like 3.5 lakhs. Then you'll adjust these two, balance you'll be paying the tax. So system itself will calculate under which method, sir? Fixed sum method. But how system will calculate? Precedingly quarterly return, na? Then the preceding quarter tax liability into 35% is taken for the first and second months. See, tax paid through cash ledger in preceding quarter into 35%. Tax paid through cash ledger in preceding month into 100%. Okay, liability for the first and second months. Okay, then payment of tax. Monthly the tax will be paid using what? GST PMT 06. By when the tax has to be paid? In a quarter, sir, first and second month it has to be paid by 25th day of succeeding month. 25th day of succeeding month. Then quarterly return. GSTR 1 na by when? 13th. 3B na either 22nd or 24th. When 22nd, when 24th. Sir, understand? This red line is there, right? Okay. Okay. The downside states and all 22nd. The above states and all 24th. Okay, sir. How do we remember, sir? This line we cannot draw in exam now. Sir, I'm assuming like South student, sir, because me being a South side person, for me it is easy to remember the South side states only. So that's why I'm saying this one, sir. But when you are watching from a northern state, na, then it's your call which states you will remember. Okay. So, but I'm telling from this side, sir, what? Down south, what are there, sir? Kerala, Vijayawada. Okay. Tamil Nadu, Kerala. It's okay, it is like what? Tamil Nadu, down south. Tamil Nadu is there, Kerala is there. Then beyond above Tamil Nadu and Kerala, Karnataka, Andhra Pradesh. Then Telangana. With Telangana, sir, what are the states like sharing borders like here? Odisha is sharing border, sir, but Odisha is not covered here. What are covered? Telangana, Chhattisgarh. What happened here? So, okay, what are the states covered? Kerala, Tamil Nadu, Karnataka, Andhra Pradesh, Telangana, Chhattisgarh, Madhya Pradesh, Maharashtra, Gujarat. Few states are there here. Okay. Sir, south 5 states, sir. Tamil Nadu, Kerala, Andhra Pradesh, Karnataka, Telangana, 5. Then above that, Chhattisgarh, Maharashtra, then Madhya Pradesh. Chhattisgarh, Maharashtra, Madhya Pradesh. Then this side, Goa and Gujarat. So this side there are 3 union territories also. What are, not 3, 4 are there. Near Gujarat, Daman and Diu, Dadra and Nagar Haveli. Then both sides, like in Bay of Bengal there is like Andaman Nicobar Islands. Then in the Arabian Sea we have what? Lakshadweep. Okay, then Pondicherry is also there near Tamil Nadu. So total 4 union territories and all these states, for them the due date is like 22nd. For all the others it is like what? 24th. Then the last one, sir, invoice furnishing facility. Sir, when the return will be filed, sir? Quarterly. Sir, when you file quarterly, it gets updated in the GSTR 2B also what? Quarterly. Recipient also will get ITC what? Quarterly. Sir, for your benefit, why recipient has to wait quarterly? So recipient is questioning you like what? Sir, I will not wait for you quarterly and all. If you do immediately now, I will get ITC in the immediate next month, then I will buy from you. Otherwise, I will go to the next shop, he is saying. Sir, for the sake of simplicity, you cannot lose customer. Okay, so by providing this facility, ultimately you are losing what? Customers. That's why for not losing the customers, do something from north. Also, I am from Delhi. So okay, this side, sir, there are so many states, sir. Even though your north side also, this side only it is easy because there are like lesser states and all. I mean, less number of states are there. But don't worry, mostly this due date point they are not asking from there. If you just remember the key points of QRMP, it is enough. Sir, what is the point here? If you file return quarterly, recipient also will get ITC quarterly. But recipient is not going to wait there. So that's why there is another option given what? Invoice furnishing facility. Invoice furnishing facility. What? For these problematic customers alone. So not for everybody you can do. If everybody is asking, then this option is not available for you. You have to go for normal return filing only. So okay. So QRMP person can report invoices of outward supplies in a month up to 50 lakhs. That also for first and second month. Sir, why not for third month? Because you will file anyhow return, right? After the end of third month, quarter also ended. So you will file return itself. So made in first and second months of quarter to reflect IDC to the recipient. So okay. So by when the invoices has to be uploaded in invoice furnishing facility, it has to be furnished by 13th of succeeding month. It has to be uploaded by 13th of succeeding month. Then applicability of interest. Okay. When the amount is not paid within the due dates, then what? Interest is applicable. What are the due dates, sir? First and second months it has to be paid by 25th. Then for the quarter end by 22nd or 24th, depending on the state they are. If not paid within the time limits, then what? Interest is applicable. For self-assessment method, sir, if you do any self-assessment wrongly in first and second months, for that wrong calculations also you have to pay interest. So that's why what? In any way fixed sum method is only better here. Okay. So with this what? Then cases where a person is debarred from filing GSTR1 and invoice furnishing facility. What? Sir, there is a mismatch between GSTR1 and 3B. Sir, in the initial years like 17, 18, 18, 19, 19, 20, that time, usually one has to be filed first, then only 3B. But that time, sir, 1B due dates has been extended. Like 1 year, 2 years, like that, the due dates has been extended. So everybody filed first 3B. Later, after 1 year, 2 years, they filed GSTR1. But if there is any mismatch in 1 and 3B, then what they are saying, those differences will be highlighted and will be sent to the registered person asking him to give explanation. Same way, if there is a mismatch between ITC availed in 3B and the ITC which is reflecting in 2B consequent to the return filing, consequent to the filing of GSTR1s by suppliers. Okay. So if there is any differences, that will be highlighted to whom? Registered person. Now a registered person, if he gives explanation, not given explanation, or the explanation is not satisfied and the difference amount also not paid, then the person will be debarred from filing GSTR1 and even from the invoice furnishing facility. And even Rule 10AA not complied. What is Rule 10AA, sir? Actually, when you are registering, you need to give your bank account details. But this Rule 10AA comes and says like, even if you don't provide bank account details also, fine, you can go and register. But by the time, like within 30 days from date of registration or before you file the return, first return, you have to update your bank account details in the system or in the portal. But what you did, you applied for registration without bank account details. Subsequently also you are not filling your bank account details. Then what happens? It relaxes to provide the bank account details. Since you are failed to comply with this, you will be debarred from filing GSTR1 or invoice furnishing facility. Okay, so the only question which I didn't read out is like the key features of QRMP, sir. Whatever we discuss, that key points will be there in here. So these are the questions, sir. So straight question only mostly being asked, sir. And one thing to be, the coverage is like mostly whatever we have covered now. Okay, so before you come to the next session, sir, do one revision here so that it remains, and you need not to again give separate time for GST alone. Okay, in the 6 days extra you give like 4 hours, here you are spending another 1.5 hour, 2 hours. If you spend on these topics now, you'll get covered. I mean, it gets covered easily. Okay, so tomorrow we're gonna cover what? Exemptions and ITC, sir. Okay.